On their back foot, but also you saw that a little bit move in the bond market. I wonder what the macro read-through is, but let's get right to that. When you look at the cross-asset board, you are seeing futures on the back foot again, down about 0.1%. The two-year yield higher by about 2 basis points. Now, look, we are monitoring what the broader tech impact is, but 490 on that two-year yield. Again, the move that you were seeing lower in the two-year yield is going to impact that dollar weakness as well, pushing higher the euro. We're looking at a 109 handle on euro. And again, that dollar weakness not just having an effect on the euro, having an effect on Brent as well. Brent crude trading at an 81 handle, higher by 0.6%, really a function more of dollar weakness ahead of that OPEC meeting next weekend. Tom, walk us through what we're seeing in the futures market.
Very briefly, a mixed picture. FTSE 100 futures down 0.2. The CAC is flat along with the DAX.
Certainly a lot to keep an eye on as well. When you talk about what's going on in the actual GMM move as well, you want to take a look at some of the moves with the FTSE 100 kind of virtually unchanged right now. We'll get to that in a moment as some of these markets start to open up more and more as well. But to me, what's immediately catching my eye is that dollar weakness. Take a look at the FX space where you are seeing that kind of strength going even into the Swiss franc as well, higher by 0.1%. Not as much movement in the pound and the euro, but I feel like a lot of that was priced in overnight. 124 on the cable rate, 109 again on euro dollar. When you talk about the sovereign bond story as well, the two-year yield starting to see come down a little bit. A lot of that's going to be a function of that Moody's rating that you saw as well. But going back to the equities indexes, seeing a little bit of outperformance in France here, higher by 0.2%. Slight outperformance in the IBEX as well with Spain. And when you look at Italy, the FTSE 100 as well, kind of virtually unchanged, Tom, but something we're watching very, very closely.
Pretty across your sectors then, mixed picture as well reflected sector by sector. On the downside, financial services, health off by 0.4%, and the consumer as well down 0.3. When you're seeing, and in terms of the positivity, the upside coming through, and again, the context is the rally that we've seen since September the 20th, the highest levels we closed in terms of Friday and European equities since September the 20th. Banks adding 0.3% so far in the session. Insurance up just 0.1%. The property sector, and that did really well, particularly here in the UK on Friday on the back of those moves lower in gilt yields. Property up 0.3%. Energy as a sector, and despite the softness we've seen in oil, currently today, energy up 0.5%. Retail also performing relatively well at 375, adding 0.4%. So that's a picture. A bit of positivity coming through from the likes of property, energy, and retail. On the downside, you've got the likes of health off 0.4%. The benchmark here in Europe, essentially flat. 456 is the level. The DAX looking a bit brighter, adding 0.8%. Pretty.
And of course, we're monitoring the macro. We're also monitoring the micro. I just want to recap some of the headlines we got at the top of the hour. Satya Nadella, the CEO of Microsoft, saying that Microsoft remains committed to the OpenAI partnership, and that Sam Altman and Greg Brockman, essentially the founders of OpenAI, will be joining Microsoft and will move quickly to give Altman and his team the resources that they need. Of course, it's worth mentioning that Microsoft has about a 49% stake in OpenAI, and the firing from the board came as a surprise to Satya Nadella. He was very outspoken about that. We, of course, will get full context and analysis shortly. Stick with us. In the meantime, let's dive into the main themes affecting the trading day. Sam Unstead joining us from our Markets Today blog. Sam, walk us through what's top of your mind.
So I think, well, there's a couple of things. So I think, in particular today, treasuries. There's an auction coming up today. We talked a lot about how the rate narrative has been impacting treasuries and creating a lot more volatility there in the last couple of months. The other thing that is very much underlying all of that is supply. And so it will be interesting to see how today's treasury auction does, how that's priced, and that will maybe give us a little bit of a read into the rest of the week when actually we're a little bit lower on data and, of course, Fed speakers.
over to China then. The currency currently up 0.5% versus the US dollar, CNY. Is China done in terms of its support and its liquidity functions for this market? How much of this is a dollar positive story for the yuan?
I think a lot of it is the dollar.
Yeah.
Certainly, as far as we're talking the yuan, I think it's mostly the dollar. I think the interesting thing about this, we've talked about this many, many times, that there's lots of incremental things that China do around the edges when it comes to stimulus. The interesting thing today, it appears that at least in terms of rate cuts, they're walking away from it, at least for now. We'll see what happens, over the course of the next couple of months. But this is just another part of the story. So now, as people are looking, what is China going to do? Where is the stimulus going to come from? What type of stimulus is it going to be? It now appears that it's not going to be rate cuts.
Well, now combine the two. We're talking about dollar strength/weakness. We're talking about the China stimulus story as well. All that's going to have a read-through into oil. Where do we go from here?
Yeah, and actually, as you mentioned earlier as well, Treasuries are also reading into oil a little bit today. We talked previously about the oil, the focus has entirely gone back really now to the fundamentals in the oil market. The dollar is having a big impact and will probably have a big impact over the course of this week. We got the OPEC meeting coming up, so you're likely to see a little bit of extra volatility as people await that and as sort of whispers come out about what may or may not happen there. But certainly the dollar in particular having a big impact on oil, which is just ticking up a little bit higher.
Yeah, really interesting. Brent currently up 0.6% at $81, WTI at 76. Whether or not, indeed, as you suggest, we get pushback from the Saudis and the Russians to the recent weakness we've had in oil at that OPEC Plus meeting towards the end of this week. Sam Unstead, thank you very much indeed from our Markets Today blog. You can get more from Sam and the team on the front page of the Bloomberg UK website or by typing TLIV GO on the terminal. Here's what else we are looking out for today. We've touched on this. The BOE Governor, Andrew Bailey, to give a speech, the Henry Plum Memorial Lecture on Food Security. Of course, anything he says about the outlook for rates, really important as markets assume that the BOE at least is done for now. Tomorrow, we get FOMC minutes, rounding out the picture, giving us a little bit more colour in terms of how officials are thinking. We had a few dovish comments, at least one coming through from Michael Barr towards the end of last week. Later in the day, NVIDIA releases its third quarter earnings. We know that Kriti is particularly interested in that story, what it tells us about AI momentum and more broadly, tech momentum as well. UK as well in focus, of course, on Wednesday. We're going to have special coverage of this. Lizzie Burden's going to be giving us all the detail and all the consequences of that speech by Jeremy Hunt, the Chancellor, delivering his autumn statement. That's on Wednesday. Thursday is Thanksgiving. US markets will be closed. In Europe, the ECB is going to release its October meeting minutes. And finally, on Friday, Germany's IFO survey results come out. And, of course, shopping season, Black Friday, and the Black Friday weekend, and all those discounts start on Friday.
Certainly something we're keeping an eye on. You're right. I do have my eye on NVIDIA, although maybe I need to have my eye on Microsoft now. Just in the last 6 minutes or so, we got breaking headlines. OpenAI's board said to be hiring former Twitch CEO and co-founder Emmett Shear to lead the company following the departure of Sam Altman. Now we're actually getting headlines that Sam Altman and Greg Brockman, the two founders of OpenAI, are going to be joining Microsoft as part of the team. Satya Nadella making a comment in a LinkedIn post. Of course, we know OpenAI was at the center of the AI boom and has dealt with this really long, drawn-out saga in the last 48 hours. Let's get a little bit more context on those latest headlines. Bloomberg Quick Takes Alex Webb standing by to break it all down for us. Alex, right off those headlines, U.S. futures spiking. This seems to be a massive boost for Microsoft.
An absolute blinder. The fact that he played what was looking like, and the stocks had been suggesting this was this would have a detrimental effect on Microsoft, the departure of Sam Altman and indeed Greg Brockman, but more importantly, the condition in which it was leaving OpenAI in a certain amount of confusion. Well, bringing these two guys in-house appears to be a big boost to Microsoft. One thing that was interesting with Microsoft's relationship with OpenAI is that while they were very close and Microsoft benefited from it, it was very different from their big rival, which is Google and its subsidiary DeepMind. It completely owns DeepMind. It is something that it means, in theory, they are far better aligned and have exclusive rights to everything DeepMind produces. That is not the case, or hasn't historically been the case, with Microsoft and OpenAI. If Brockman and Altman are able to recreate the success of OpenAI inside Microsoft, then it provides a massive boost to the stock.
It's really interesting, isn't it? It's like a double bet to some extent. They've got the OpenAI play, and then they've got these guys in-house and maybe building out their own kind of DeepMind equivalent. What do you think it means then, Alex? Just expand on what you've been touching on in terms of the competition between big tech as they address what is needed around AI and how much investment they want to see take place there as they compete increasingly aggressively.
So look, let's remember, for Microsoft and Google and Amazon, this is a cloud product. This is we think of it as the way that we might interact with generative AI. It increasingly looks in the medium to long term. That is not really, or I should rephrase that. Maybe in the short to medium term, that is not where these companies are going to be making their money. They're not going to be making it by licensing the AI products. They're going to be making their money by licensing the AI products through their cloud offerings, and it's in paying for the cloud processing power, which is pretty intense when it comes to AI, that they will really start to make bank. Microsoft has got this had this tight relationship with OpenAI, which has benefited enormously. Google, of course, has DeepMind and now Google DeepMind, as it's called. Amazon has been trying to cozy up with Anthropic, which was essentially formed by a bunch of people who left OpenAI a few years ago. So that's really the sort of battle lines that have been drawn. Microsoft now, a little bit of disarray, clearly, as a consequence of this OpenAI conundrum over the weekend, but it does look as though it's working quickly to consolidate after what's happened.
Certainly something we're going to be keeping a very close eye on. And as you mentioned, not only a very tight relationship, Microsoft has actively invested in OpenAI, 49% stake there. Bloomberg's Alex Webb, we thank you so much for bringing us that crucial analysis. Coming up on the program, we're going to bring you the stocks on the move during this trading session, including Bayer, all as the German company faces 2 fresh setbacks. We're going to walk you through it. Stick with us. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
From New York City,
From London and Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
He's
story.
there, the kind of upside.
This is Bloomberg.
This is Markets Today, 12 minutes, almost 13 minutes into the European trading day, and you're currently seeing the European benchmark flat, US S&P E-minis flat as well. Nasdaq futures currently pointing lower by about 1/10%. Let's check in on some of the individual stocks on the move here in Europe with Joe Easton. Joe.
So we've got a massive red number on the screen here. Very exciting. This is Bayer over in Germany. As we said in Stocks to Watch, two bits of news. Firstly, the Roundup weed killer ruling of $1.5 billion worth of fines over to 3 claimants in the US. But the bigger news, according to analysts, is this drug trial that they've stopped today. It's a drug that was supposed to prevent strokes in people with abnormal heart rhythms, and they've stopped it because it's inferior to what is already on the market. I've just read JP Morgan's note on this, and they say it could cut some of the sales by as much as $9 billion and wipe 11 euros off the company's share price. And we can see it coming down by about 5 euros at the moment. That's the biggest drop for this stock since the early days of the pandemic back in March 2020. And that is trading now at a 12-year low for that stock for Bayer. Speaking of other big decliners, we got Julius Baer. Now, their guidance was also weak. Flows were pretty strong, but they have actually come down, according to analysts at Kepler Cheuvreux. They're cutting their earnings guidance by around 10% for the company in terms of their estimates for those. And another one absolutely slammed. Lots of red today. We've got Ashtead falling in the UK. The machine rental firm, mostly exposed to the US, competes with United Rentals. Almost all of their revenue comes there, cutting their guidance due to that writer's strike and also a reduction in emergency vehicles needed for things like hurricanes and other disasters, that kind of thing. One we haven't done yet is AMS Osram, also dropping. This is a capital raise. It's a chip and lighting sensor company. Now, they are raising funds due to weakness in a number of their end markets, according to the Swiss firm today. So plenty of big decliners. One firm we're seeing a small gain in, this is Halfords, the bike retailer. I bought a bike from there during the pandemic, used it about 3 times and haven't used it ever since. But they are reportedly the target of a failed takeover approach by Red Northgate, which was a car retailer in the UK. This was reported by The Telegraph. Red tried to merge with Halfords. That was rejected. So we're seeing some small positivity, potentially a couple of people thinking that that deal might reignite further down the line for that one. In terms of some ratings changes, they're keeping us busy today. The analysts, we got Standard Chartered. This is raised to by a Goldman Sachs that says the underperformance in that stock that's exposed to Hong Kong is unjustified. Meanwhile, Goldman is also catching up with the plunge in the Worldline, cutting that one to neutral. That one fell off a cliff a few weeks ago following a massive profit warning. We got Glencore. This one is cut to equal weight. And Morgan Stanley, they say the company's bid for tech resources means they have less cash to buy back shares, so they downgrade that one. And finally, Melexis is a chip maker over in Belgium, upgraded at Berenberg after underperformance. They see an opportunity there, and that one is rising at 2% over in Brussels.
Joe Easton from our equities team, we thank you as always for walking us through the major market movers at this European Open. More ahead, stick with us. This is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
It was going to keep Rain World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Markets Today. 19 minutes into the European trading day. European stocks are flat. You're seeing losses coming through in Germany of 0.2%. The CAC count, though, in positive territory. Here in the UK, the FTSE 100 off by 28 points at 7,475. Let's get to what's happening, though, on the macro front and the bond story particularly. PIMCO buying the yen on a bet that the BOJ will be pressured into tightening its monetary policy, thereby moving back and walking away from yield curve control. That's as inflation quickens. The yen has tumbled more than 12% against the dollar this year, disappointing many on Wall Street who predicted it would rally as a hawkish Fed and a dovish BOJ swap places. But of course, that dynamic is starting to change. Let's get a take on this from Shamila Whelan, global macro strategist at Westbourne Research Services. So the bet from PIMCO, of course, one of the biggest asset managers, particularly in the fixed income space globally, that the yen is going to strengthen because they're going to have to soften their loose monetary policy. They're going to have to adjust that. They're going to have to turn a little bit more hawkish on the back of this inflation coming back. Are they setting themselves up for a fail over at PIMCO?
Ooh. Now, you've really caught me in a bind. Let's just put my view forward. I think the yen and yield control is kind of two separate, even though you think of them as interrelated. On the Bank of Japan abandoning yield curve control, I don't see it in the first half of next year. Right.
But it's really interesting. So you're making the point that actually I'm confusing the two by looking at yield curve control and the direct links to the yen. You're saying these are two separate stories.
They've become a bit separate, right? Normally they're interlinked, but they've become a bit separate. And the reason why I say it's separate because my view is I expect the Fed and the ECB to cut interest rates probably in the second quarter of next year. So that in itself, if the dollar's weakness we're already seeing, so that could put a floor down under the yen over the next few quarters, that the yen, paws back some of its losses, while the Bank of Japan still maintains yield curve control. And I see them doing that because for a few reasons. One is inflation is easing, and number two is, judging by their minutes, they're very comfortable with inflation being outside their 2% target. They're looking at 2.8% inflation for this year, next year coming down to 1.7% in 2025. And that's because their GDP growth is slowing in their forecast.
At the core of that, though, you say you don't expect it in the first half of 2024. There's a market consensus that in the spring of 2024, the wage growth numbers is what's going to prompt you, Wade, to kind of make that U-turn. I think that's part of PIMCO's kind of doubling down on that approach. In your view, why does the wage growth number not matter?
No, Kriti, the wage growth number completely matters, right? Because, you've seen it from the comments from Governor Ueda recently saying that, they are looking for wage inflation, right? They want the benefits of higher prices to feed through it. But at the same time, he's also said that they are not convinced that Japan has hit 2% inflation on a sustainable basis. And at the same time, also, in terms of growth forecasts, they're looking for growth to moderate from 2% this year to 1% next year and the year after. And don't forget, the yen is good. A weak yen is good for trade, right? Which we're all seeing in the earnings growth.
Pulling away from Japan for a moment and with the lens back on Europe and the US, has the bond market rally gone too far, do you think?
Not really. I think, the bond market the whole thinking is shifting, right? It's now no longer a question of how long will interest rates stay high for. The question has shifted to when are the first rate cuts, right?
But is that premature?
I don't think so. Okay, it's not happening this year, but as I was saying earlier, I think the first one that will move will be the ECB, followed by the Fed. The Bank of England will lag. ECB and Fed, I see them moving in the second quarter of next year. The Bank of England probably over the summer, possibly into Q3. And that's because growth is moderating and headline inflation has been undershooting on the downside, even though core inflation has been sticky. But the shift has been that trade-off inflation growth. It is firmly shifted to growth now.
But then how do you factor in the market story to that as well? Tom and I were discussing earlier as well when Pierre Wunsch made those comments basically saying that if the market is overly pricing in those rate cuts, it basically builds the case for a rate hike. To what extent does the market pricing, the dovish market pricing, do the work for the Fed in reverse?
It does, of course, because it's money markets, right? But I think the Fed and the ECB will still loosen monetary policy because remember, interest rates has got two functions, right? One is it is the cost of capital, but interest rates are also a signaling mechanism of central banks to market participants, whether it's households or corporates, and it is signaling their direction of travel in terms of growth and inflation.
ECB is the first to cut. The critique to that we hear is that the ECB's mandate is inflation, and inflation squarely. They don't have a growth mandate over the ECB. That will be the challenge to that proposition, that they're going to be the first to go.
But Tom, we've seen the ECB in the last 10 years, right? We saw Draghi with whatever it takes. Their mandate might be inflation, but they're very growth sensitive, and you've seen Bundesbank kind of all the time, churning in unease, but.
The reality of the recent decade suggests that their scope is much wider than the narrowness of that mandate around inflation.
Absolutely.
And they will continue with that.
Yeah, and they were after the third quarter GDP numbers, there's still that risk of a winter energy price spike with Ukraine and Russia continuing and the war in the Middle East. They're definitely going to, in my view, I hope I'm not eating my hat, in a few months' time, I think the ECB will move first.
So give us an FX call here. Are you short the dollar? Are you short the euro? I can't quite tell.
Ooh, hard one, right? Well, in theory, you should be short the euro, right? Also the dollar, but you're ahead of the dollar, and because I just don't see the dollar collapsing completely.
Okay, I want to get a quick one for you, from you on the BOE. You've touched on it, of course. You think maybe towards the end of next year, disappointing for some who are looking at remortgaging in this environment. Why does the BOE have the resilience to hold out and continue with that higher for longer beyond the ECB, given the fragility we're seeing in the UK economy here?
Oh, they don't have the resilience. The economy doesn't have the resilience. We're all headed into a recession. There's no doubt about it. I mean, you know how much you're paying for a cup of cappuccino nowadays, right? The cost of living crisis is very much there. And, the economy's slowing. We saw the October retail sales number. We've seen what's going on with investment. Yeah. The government's scrambling around to hopefully deliver some fiscal giveaways in the autumn statement. Yeah. But Bank of England, out of all three of the central banks, is still the most focused on inflation, and rightly so.
Certainly something we're going to keep a very, very close eye on. The cable rate about 124. Sharmila Whelan, we thank you so much, global macro strategist over at Westbourne Research Services, for joining the program. Stick with us, plenty more ahead. This is Bloomberg.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
This is Markets Today. We're 30 minutes into the European trading day. Here are your top stories. Silicon Valley shakeup. OpenAI plans to hire the former CEO of Twitch as investors and executive push to reinstate Sam Altman. But Microsoft says the OpenAI founder is joining the tech giant instead. Now, a new leader in Argentina, outsider Javier Milei, wins the nation's presidency, promising a radical overhaul to fix decades of mismanagement. Plus a double dose of pain for Bayer, the German drug maker plunging as much as 15% as it faces two fresh setbacks. Tom, there's a lot to digest here around the world.
Yes.
Talk us through the markets. Go ahead.
There's the AI story. Here's our moment,
Yes.
Kritty. There's the AI story, then there's corporate earnings story. You touched on that with Bayer. Yeah. The disappointment on the earnings front, the legal challenge, I should say, coming through from Bayer, and the trial issues. On the earnings front, it comes through from Ashtead, and there's disappointment there. It's one of the biggest losers as well. A supplier of materials, or at least equipment, within the construction industry. Top line, though, the index here, the European Stock 600, is currently down about 0.1%. Taking a bit of a breather, arguably, after the run-up that we've seen, closed on Friday, the highest levels since September the 20th. We continue to monitor, of course, and assess the central bank story, and we had one of the hawkish members of the ECB pushing back on the moves lower that we've seen across European yields in the last few weeks. The DAX currently down 28 points, down 0.2% at 15,890. Here in the UK, the FTSE 100 back below 7,500, off by 28 points. The autumn statement on Wednesday. Will the Chancellor throw out any bones to his backbenchers and to the markets? We watch for that, of course, and Lizzie Burden will bring us all the reporting around that story. On the sector-by-sector basis, let's flip the board then and see how things are shaking up. The energy story is still important, of course. We have OPEC Plus and that meeting later today after 4 straight weeks of losses across the oil price. We'll see if there's any pushback. Energy as a sector currently up 0.3%. Retail getting a lift, up 0.7. Property essentially flat. Insurance just up 0.1. Banks also gaining 0.2%. Building on the gains of Friday, by the way. It's real estate, banks and finance that were the leading sectors at the close on Friday. The weakness then coming through from health, and this is the Bayer story, down 0.7%. You're seeing a little bit of pressure on travel and leisure as well. That sector off by 0.3%, and a similar picture for basic resources and financial services, taking a breather, off by 0.3. Across your benchmark, down by 0.1, but this is still a market that is looking for a little bit more direction, Kritty.
In the meantime, let's talk about one of our top stories from over the weekend. Libertarian outsider Javier Milei will become Argentina's next president after beating economy minister Sergio Massa in Sunday's runoff election. Milei has promised a radical economic shakeup, including dollarizing the economy and scrapping the central bank.
Today is a historic night for Argentina. Thank you very much to everyone who came. Thank you to everyone who made this possible. Thank you to the team that has been working for 2 years to transform Argentina and to achieve the miracle of having a liberal and libertarian president. Thank you very much.
Bloomberg's Rodrigo Orihuela joins us right here on set. Look, the margin of victory was quite substantial. Should we be surprised?
The margin was the biggest Argentina has seen since the return of democracy. There was never such a big margin. It was a surprise in the sense that a month and a half ago, it seemed that Massa was going to win this because of the uncertainties around Milei. But that changed in recent days as people started really getting tired of the economic disaster, which is Argentina. And the economy minister was not really giving any way in showing he would change. And that's the big word we're hearing in Argentina, which is change. People were just willing to go into this leap into the unknown, which is Milei, just because they wanted something different after so many years of the Kirchnerist wing of Peronism, which is what got us here.
And we have about a 3-week time frame before that transition, before he takes power. What are you watching for from Milei over that period of time?
The first big thing is exactly how he builds up his team. He's made a lot of big promises. Nobody's sure how many of those he will keep or not. getting rid of the central bank, dollarizing the economy. So the first indication will be who are his ministers, who is going to run the economy. He's already said who he wants to put in charge of the central bank until the central bank disappears or not. And the question there is, who will he bring in? Will he bring adults into the room, as some expect, or not? And that's the one big thing people are watching. The other big question is, will the peso fall tomorrow on Tuesday when markets reopen in Argentina?
The critics of his policies would say he's made some pretty big promises here, dollarizing the economy, for example, with very few cash reserves to back that up. With the rest of his agenda, how doable is it?
So there are two big legs in his agenda. On one hand, which is the leg that's basically defended by his vice president, which is a typical nationalist far-right leg. But then his own policies are pretty much an experiment on the global scale. There's never been a libertarian who is so openly libertarian and who really wants to get rid of so many things. And that's where it seems rather difficult to imagine he'll be able to do it, because his power in Congress is limited. He only has about 15% of the lawmakers in Congress. So there's a big question about how much legislation he'll be able to pass without having to rely on more moderate center-rightist parties.
It's fascinating that from a market's perspective, it was actually this volatility is seen as a positive. It's like we'll do anything to see some sort of change in the status quo. Bloomberg's Rodrigo Orihuela walking us through that crucial story out of Argentina. I want to get to some of the other top red stories on the Bloomberg terminal and bring you the latest out of the Middle East. The United States says the deal to release hostages taken during the Hamas October 7th attack on Israel may be at its closest stage yet. This as Israel releases a video it says proves the existence of a Hamas tunnel beneath Gaza's Al-Shifa hospital, which the military raided last week. The footage shows a shaft to a fortified tunnel that the military said is 10 meters deep and 55 meters long. Elon Musk has dismissed reports of him being anti-Semitic as, quote, bogus, and that it couldn't be further from the truth. He sparked an uproar last week after agreeing with a post on X, the social media company formerly known as Twitter, that claimed Jewish people held a, quote, hatred of white people. The news came as a range of advertisers halted spending on X, including Disney and Apple, after a report found their ads ran next to pro-Nazi content. Billionaire Bill Ackman, though, has defended Elon Musk, saying that while he wasn't perfect, the world is in a better place because of him.
Now, Citigroup is said to start on a round of job cuts as soon as this week. It is part of the first major wave in CEO Jane Fraser's overhaul, aimed at simplifying the lender and getting rid of 5 layers of management. Before the restructuring plan, Citigroup cut 7,000 positions just in the first 9 months of this year. Australia has stunned bookies' favourite India to snatch the Cricket World Cup by 6 wickets in front of an almost capacity crowd at the world's biggest stadium in Gujarat. The country becomes the first to hold both the ICC World Test Championship and the Men's Cricket World Cup simultaneously. The Australian women's team holds the ICC Women's World Cup and the T20 World Cup trophies.
An exciting moment for Australia, beating them in their host country. Let's move on to one of the major stock movers this morning. Bayer slumping after facing 2 fresh setbacks. The German drug maker has stopped the main study of its top experimental medicine, and it's lost a key U.S. trial against its weed killer Roundup. Joining us now, Bloomberg's European healthcare reporter Tim Lowe joins us from Munich. Tim, break down just how bad these setbacks are for Bayer.
Sure. Yeah. Well, 2 really bits of bad news this weekend. I was already bracing over the weekend for a rough morning for the company based on a $1.5 billion jury order from the U.S. on Friday. Bayer lost another Roundup lawsuit, and the jury said they should pay $1.5 billion in damages. That's bad. They've had now 4 trial losses on Roundup in the last month or so. So I was bracing for pain. But then last night they came out with more devastating news for the company, which is that their top experimental drug in their pipeline, asundexian, they're stopping the phase 3 late-stage trial of it because it's showing poor efficacy. Now, the company was really placing high hopes on that particular drug to be a source of growth in the coming years. They're already about to start losing a lot of sales from 2 blockbuster medicines that are losing patent protection. And as you see in the share mover today, I think that's the key news this morning. The market had really been expecting that drug to succeed. Morgan Stanley even said that this particular indication that is now problematic, they were expecting 4 billion euros a year in sales from that. So as of last night, that appears off the table. And now a company that's just been in crisis after crisis in the past years is falling to lows not seen in more than a decade.
Yeah, and as you say, Tim, the disappointment is there, and it's etched into the stock price move of the day, currently down 17.4% or so, though it did briefly tick below 19% in terms of the drop. What does it mean then, and you kind of nod to this, Tim, in terms of the restructuring efforts of this business by the CEO? What are you going to be watching for in the weeks and months ahead?
Sure, yeah. It's essentially, to put it shortly, it's getting harder on all fronts. This is a company that has 3 divisions: pharmaceuticals, crop science, the agriculture, and consumer health. And so now the 2 big ones, which is pharmaceuticals and crop science, both had major blows over the weekend. And the new CEO, Bill Anderson, who came in over the summer, he's essentially said he's looking at 5 or 6 different potential permutations for the company. He's going to roll out some sort of strategy probably in March. It could involve splitting off the consumer health division, which is the smallest, or even the crop science. Now, if it's crop science, that's pretty massive news because Bayer spent $63 billion to buy Monsanto less than a decade ago, and that would essentially be undone after Bayer has already maybe spent or may have to spend about $16 billion on top of that to fund all this Roundup litigation in the U.S. So just crisis left and right. It just kind of brings old questions to the surface. Is Bayer's pharma division really big enough and strong enough to make it on its own? Will it become a takeover target for other companies? Now, if that were ever the case, this drug asundexian would be something that companies would have wanted. But now, probably not. So the new CEO, Bill Anderson, essentially had a really hard job as of last Thursday. And as of this morning, it's significantly harder.
Tim Lowe, fantastic. Really appreciate the context. Bloomberg's European healthcare reporter with the details on the fortunes or misfortunes of Bayer, joining us out of Munich. Thank you. A redhead crossing the terminal just in the last couple of minutes or so around the real estate property crisis in China and efforts by regulators and officials to address that crisis. China, and this is the redhead, drafting a whitelist of 50 developers for a financing boost. This is significant. Names on the list include China Bunker, one of the largest developers in the country, Shenzhen Group and Longfor Group, also a massive real estate company in China, among the list of 50, again, on that whitelist of companies that may receive additional financial support. Just the latest step from officials in China to address that real estate crisis after the Bloomberg reporting on over $100 billion that has been allocated and planned for in terms of shantytown redevelopment to help local governments. This seems to be at least another arrow that is being fired at this estate crisis, real estate crisis, to try and address the pressure. So we'll get more details on that for you and bring that to you as that story continues to evolve. Chrissy.
Coming up on the program, we continue our tour around the world from China to Nigeria. Their central bank has postponed its rate decision for the second time since September. We dive deeper into the story next. This is Bloomberg.
There's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea. But Technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
So we get to ride in an Uber with the Uber CEO.
Yeah, that'd be pretty cool.
Come along with me, Emily Chang, as I ask tech leaders of today what makes their businesses future ready for tomorrow.
You're an expert.
This is Markets Today. We are 45 minutes into the European trading day. European stocks off by about 0.1%. Let's get a view now on what is happening in Nigeria, though. The central bank there postponing a meeting of its Monetary Policy Committee for a second time since its new governor was nominated in September. Investors had been looking to the MPC for signals on how it's going to rein in inflation that is accelerating at the fastest pace in 2 decades. For more, let's bring in Bloomberg's Africa correspondent then, Jennifer Dabasaja. Jen, what is the latest then behind this postponement? What is the rationale?
Right. I mean, Tom, this is really coming as a surprise to many people. We were expecting, as you mentioned, this MPC meeting really to be the first time that we hear from the new central bank governor about what is going to be done on inflation. But we just received word about this meeting now being postponed to an undetermined date. Now, as you mentioned there, I mean, inflation is top of mind for Nigeria and a number of other African economies. In Nigeria in particular, in October, inflation reached an 18-year high, and there's some estimates by Barclays and others that it could even accelerate even more, getting up to 30% down the road. And so we were really looking to this MPC meeting to be the time that we hear from the new Governor Cardozo about potentially reining in inflation in terms of what they're going to do. And it was important because it was really going to start off a slew of other meetings that we're seeing across the African continent dealing with inflation and dealing with this Monetary Policy Committee. And when it comes to Nigeria, there were some expectations that we could see basis point hikes from 25 basis points to 325. And so now the question is, when will we see this meeting happen? And what exactly is the central bank going to do? Just one more note on that. Although we're not going to have this MPC meeting tomorrow, we are expected to hear from the governor at another event that's happening later this week. Traditionally, it's supposed to offer some policy statements on where the economy is going. So we'll wait to hear how that's going to pan out. But still, a bit of a setback in terms of dealing with inflation in one of the number of African economies.
Let's go from Nigeria to Zambia and talk a little bit about the restructuring negotiations there. Jen, what do we know?
Yeah. Right. I mean, Kriti, this is also something that came this morning, a fresh headline that we got. So this is a setback really for Zambia in terms of the restructuring agreements that we had been really waiting for. So what we got is word that the Official Creditor Committee, which is co-led by China and France, rejecting the new deal for the Eurobond agreements with Zambia. Now, the reason why this is so significant is because, of course, over the past month or so, we had been waiting to hear what exactly the terms of this deal were. Now we're getting word that the Official Creditor Committee does not think that the restructuring deal that was outlined and agreed upon goes far enough to share the debt burden with bondholders and the official creditors. And so now we wait to see really how this pans out. The concern, though, is that this presents another roadblock into any sort of restructuring and revamping of the Zambian economy. We actually got a quote that said this is not just blocking the path to Zambia's debt sustainability, but it also potentially puts a threat in the common framework, which is this G20 common framework that Zambia, among others, have been looking to restructure their debt and get back on a
a good path. And so this is a concern that, now we know that there has not been a deal reached. Now the question is, what are the terms that the official creditors are going to be looking for, and whether or not we're going to see the Eurobond holders willing to accept that. But at this point, there is still a stalemate over how exactly to restructure Zambia's $6.3 billion debt.
It's certainly something we're watching a very, very close eye on. Bloomberg's Africa correspondent Jennifer Salvasaggio bringing us that crucial story. And I should mention she did some great reporting earlier this morning as well about South Africa and how their kind of fiscal story is actually impacted as well in a similar way that some of the other countries that she mentioned there as well. A lot of it aided, by the way, by Germany. I just want to bring a few headlines here. German Chancellor Olaf Scholz very quickly saying African climate funds are for a period through 2030, and he does plan to allocate about 4 billion euros for those African climate projects, something we're going to keep an eye on. In the meantime, Tom, what do you have your eye on?
Yeah, my must-read of the day as the clock ticks down to bonus season. This comes through from Paul Davies of Bloomberg Opinion, and what he's saying is that this time around, when bonuses come through, you may see a number that is more about your potential than your actual performance. Of course, we've had a tough year in terms of what's happening across investment banking revenue. Trading desks have been challenged across equities and fixed income. M&A, you've seen activity there down by about 30% in the first 9 months. But again, this is the stress point coming through from Paul in terms of how this bonus season is likely to be very different from bonus seasons of the past. Pay is likely to be far more mixed than the headline trend suggests. Many rewards will be granted to potential more than performance. He says, for example, your trading desk may have done very well in a challenging year, but some of that revenue may be allocated to some in the investment bank that your employer wants to hold on to because of the potential that markets are going to pick up in the years ahead. So that's my must-read of the day as we look ahead to bonus season.
Certainly something we're going to be keeping a very close eye on. Tom, and to our global audience, I want to bring a quick headline that we're getting an update, if you will, on the bond market, specifically off the reaction to the Argentina election win for Javier Milei. You're starting to see the Argentina 2035 bonds rising 0.6 cents on the dollar, again, attributed to that win. We'll bring you the live pricing. Stick with us. This is Bloomberg.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
This is Markets Today. We're about 54 minutes into the European trading day. Let's talk a little bit about what's happening in these markets. Noor Ali joining us now from our MLive team. Noor, walk us through what's top of mind this morning.
Yeah, absolutely. Look, the latest news out of Microsoft hiring OpenAI's former CEO. Can we say that now? Can we say former CEO?
Yeah, I think we officially can, yeah.
After all that news, I mean, it does show you that there's revived hope for that AI rally. We've had shares in Germany rise. You know, there's a bit of a boost for the NASDAQ futures and the lower dollar as well. I think that's helping that risk sentiment. You had Paul Dobson on earlier talk about that revived, you know, the EM currencies really having their moment right now because of that dollar weakness. And now you're seeing potentially, you know, risk assets could potentially be rising further, and that AI rally from the summer coming back.
No, I love your Monday optimism, but it could all be derailed by a 20-year auction in the US.
Look, I think this is a really good moment, right, for us to test the investors' resolves. Are they really confident that that sell-off in bonds is here? And I think that 20-year auction could not come at a better time because the dollar is weakening, bets are rising that the Fed will cut rates. You know, we've got the UK and Europe, you know, the central banks there. We're all expecting them to cut rates sometime next year. And now this auction that's going to come here at the 20-year mark will point to that. And, you know, the term premium has actually come down towards zero. So we could potentially be in a very positive week, setting up that Santa rally that we've talked about last week with a really great start, or a big bang, as we may say.
You talked a lot about the U.S. I'm going to put you on the spot here. 20 seconds. What happens in the U.K. after that autumn statement?
Look, you have a very cautious Treasury department, and you know, obviously reminiscent of the issuance that we had last year with the trust government. That's definitely not going to be the case this year. Investors aren't looking for that. We're looking for a lot more prudence. You have an election year coming out of the UK next year. It'd be very interesting to see what they can offer investors and their voters this time around. But I think for now, a lot more stability compared to last year.
Noor Ali, bring the optimism on this Monday. Thank you very much indeed from our Markets Live team. European stocks are currently flat. US futures just holding on to the downside, but have turned more constructive just in the last 30 minutes or so. There is plenty more coming up. That is it for Markets Today. Stay with us. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything. Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. OpenAI plans to hire the former chief executive of Twitch as investors and executives push to reinstate the founder, Sam Altman. Well, Microsoft's chief executive says Altman is joining the tech giant instead. Also on the program, we speak to the UniCredit Group chief economist, Eric Nielsen, on mounting speculation that the Fed is nearing the end of its tightening cycle. Plus, Javier Milei wins Argentina's presidency on a radical platform that includes plans to shut down the central bank and dollarize the economy. So let's take a look at the European markets map again. There's quite a lot going on. A lot of the focus will be on some of the data coming out overall in the week. But the focus is really just, once again, markets trying to figure out whether we've seen it. That's it for interest rate hikes. So the dollar extended decline, U.S. equity futures pretty much steady. Traders really currently pricing in about a 30% chance of a first rate cut from the Fed in March. That's a huge deal. I don't know whether traders then will double down on that, but certainly they're awaiting some of the minutes of the last Fed meetings. That's a little bit later in the week to understand some of the insight into policymakers' thinking. Now, a couple of corporate news that we're also watching out for. Of course, we're all over Microsoft to try and figure out exactly what happened at OpenAI and what happens next with Sam Altman. But shares tumbling in Bayer. Now, this is after the company said it's stopping the main study of its top experimental drug, and it's also losing a key U.S. trial against its weed killer, Roundup. So you can see Bayer actually down some 17%. We'll see if there's any pre-market move on some of the other big ones that we're watching from the U.S. Julius Baer also warning of lower profit as credit provisions are jumping. So back to our top story, and OpenAI's board is said to have hired the former Twitch chief executive and co-founder Emmett Shear to lead the company. Meanwhile, the company's former chief executive, Sam Altman, will join Microsoft to lead its AI research team. Now, Microsoft chief executive Satya Nadella is said to have initially lobbied for Altman to be reinstated at the helm of OpenAI after a sudden dismissal last week. Well, Bloomberg's Tom McKenzie joins us with the very latest. Tom, I have to say, it was a crazy weekend. I mean, I remember being at dinner on Friday where it's like, he's been ousted, and then you hear about these negotiations and try and get him back on. What do we actually know? I mean, is that it for Sam Altman at OpenAI because they have a new chief executive?
Well, it seems like this is the new future for Sam Altman. As you say, it was a whirlwind weekend, and who would have predicted last week that this is what we'd be looking at today? So yes, Altman, along with Craig Brockman, the former president at OpenAI, joining Microsoft. That's been confirmed by Nadella in this post, who also says he remains committed to OpenAI. Microsoft have a 49% stake in that business. What we saw over the weekend was Sam Altman actually going to the offices of OpenAI. There was some disagreement over whether or not the board would actually bring him back in, because we know that senior executives within the business of OpenAI, and of course their important investors and Microsoft, wanted him back in. Ultimately, the board didn't acquiesce to some of those demands, and this appears to be the solution that Microsoft and others have come to.
Yeah, it's pretty incredible. It feels like there's two camps, right?
Yeah.
Pro Altman, against Altman. So now we understand that he'll spearhead Microsoft AI's research team. If you look at the share price, I think we're pre-market, and actually Microsoft is up. So how do you see that playing out?
Yeah, Microsoft getting a lift on the back of this news. If you read it one way, they've got a camp or a foot in both camps. They continue to have their investment in OpenAI. We'll watch if that holds on the back of this. And now they have Altman and Brockman within Microsoft building out this new AI research team. Of course, Alphabet Google, they have DeepMind, and that's very much, of course, embedded within the Google infrastructure, and that's done huge progress and has made huge progress over the last decade. This is an opportunity for Microsoft, arguably, to close the gap on that front while still having exposure to OpenAI and all of their corporate clients. They have about 90% of Fortune 500 companies using ChatGPT and other tools that have been developed by OpenAI.
So interesting. Tom, thank you so much. Tom McKenzie, they are AI resident expert. Now, joining us to talk markets, UniCredit Chief Economic Advisor, Eric Nielsen, along with Bloomberg's MLive, Eddie van der Walt. I know you have a lot to say about OpenAI, but Eddie, let's go to you first on that. Eddie, I mean, it's a really pretty incredible story and how it's played out. over the last couple of days. How much disruption are you expecting in the tech space?
Yeah, absolutely. Look, I think this is a coup for Altman, and it's a coup for Microsoft. And what it shows is just how much Microsoft is going all in on AI, right? I think they are taking the leading voice, from OpenAI, bringing it in-house, and showing that, so they're going to get a lot of. So they were the largest shareholder in this company, but now they've got 100% of, not 100% of the knowledge inside the company, but certainly they have the person who set the strategy that got the company to where it was. It shows just how big a deal this is. But at the same time, for Altman, right? I think, yes, it's great to have your own product and to take it to the next level and so on. But inside of Microsoft, he will probably be able to do much, much more. So I think this is actually a win for both of those parties. What it means for OpenAI, that's anybody's guess, because I think Microsoft will probably start to try and untangle themselves and go, use their own knowledge. But it does show that the tech sector is absolutely all in on this idea of AI. Microsoft already seen some of those benefits, right? They are picking up in search. I mean, I myself, I've switched from Google to Bing just because I get that artificial intelligence day by day as I do my searches and so on. So I think, and that's true for a lot of people. So I think the tech sector is I think this just shows that going into next year and the end of this year with the potential Santa rally on the back of further optimism on AI.
But Eddie, and I want to get to Eric in a second to talk about, the broader, I guess, democratic concerns, given that next year is going to be a huge year for the elections. Eddie, is this just boils down to whether we can do AI with an ethic lens? I mean, if you look at the business case, is this just pure business about these two companies and making money, or is it really the bigger question also on how this impacts elections, how this impacts how we view the world?
All of those things are absolutely crucial, and it is going to be more and more important as we get to next year with the US election. But at the same time, you've got to remember, OpenAI was founded on those principles. It was a response to, with Elon Musk and so on, working with others to try and get away from the idea of, AI at any cost and just, develop the technology at any cost. So I think, Altman has shown that he has concerns about this and will take the technology seriously. However, there are many, many actors out there that will apply this technology in many other ways. And we don't really know how that's going to play out yet.
Eric, what's your take on this? Again, I mean, you're no stranger to turmoil in looking at the economy, and it's unclear whether, this turmoil on artificial intelligence could also impact the way we view the world, and so political decisions and therefore the economy.
Yeah, it's huge, right? It's fascinating, right, as far as I can see, because we have right now a very interesting race between the technology, which is exciting in many ways, but also frightening in many ways, right, in certainly the political contest. And we're running into big elections, as you said. So if the sector doesn't sort of get this right, the risk is that you get overregulation, and that sort of kills stuff that we don't want to kill. So it's super interesting. I don't know how it ends up.
Yeah, so away from this, it's all about treasuries and markets and kind of will the Fed cut or not? Do you think they're too optimistic?
No, I think they will. So here's the issue. Inflation was on everybody's agenda, and now it's coming down so fast, even in America. And America hasn't even they've had 3% growth over the last 4 quarters, right? Europe has had nothing. So all the debate is about will they manage this sort of soft landing from a very high level. And if they are to do that, I suspect that they have to start to cut. And with inflation coming down, I think the odds are indeed that they will start here by the end of the first quarter, thereabout.
I mean, what's your take, Eddie? It feels like, market expectations for what the Fed does changes. So we're expecting bad news from the economy, and then after 6 months, actually, they surprise to the upside. So I don't know if this time is any different.
Yeah, Francine, I think it's really interesting the pricing that we're seeing for the Treasury market, right? I think on the one hand, what we've seen over the last couple of days is a complete pricing out of any expectations of a hike. At the same time, there are some people expecting a cut. I think therefore you've shifted the median. It's almost like you've got a long tail distribution to the one end and a very sharp end of the distribution on the upper end of the range. And I think therefore you've shifted your mean of what markets expected, probably somewhere below what the median and the mode investor expect from the Fed. I think some people do expect there will be maybe some cuts. I think it will be because the Fed can cut, not because it is forced into cutting because they see the whites of the eyes of a recession. I think they will cut because they see inflation is coming down and they don't need rates to be as high, and therefore a preemptive cut rather than all out. We've got to cut 50 basis points, 100 basis points because the economy is tanking. Because at the moment, there is just no indication that that's happening. The jobs market remains strong and the consumer remains strong. We've seen some, Walmart and a couple of other companies give us some warning signs there. But overall, I think the consumer in the US looks strong. And therefore, I think the pricing is probably a little bit pessimistic in terms of what is coming for the US economy. But I also think that is just a function of the fact that really nobody at this stage is expecting a hike anymore.
I mean, I do think it was a big deal, actually, that the Walmart chief executive was saying that he sees disinflation when he looks at his pricing across Walmart. So we're seeing some pockets of price pressures, right, that are persisting, Eric. But are we actually in a global disinflationary environment?
We could be in 2024, not necessarily a disaster, it's one of those sort of deflationary sort of things that we economists we hate and we fear, but simply because we had this big hike in inflation and prices are coming down again. So it's very likely. In my native Denmark, we have zero inflation now, right? 0.1 on the last number, because it just automatically comes down. And I think in America the same thing applies to a lesser extent. So I think, to Eddie's point, remember this: the Fed and the ECB, hopefully, they're looking at the forecast period. So they're looking about 6, 12, 18 months out. And if you were sitting at the Fed and said, what's the odds of what American economy looks like in 6, 12 months, I would say the overwhelming probability is that you have had a lot weaker growth, maybe zero for a quarter or two. There's no excess savings among anybody about the very richest in America right now. So where will it come from, the continued strong growth? So I think with inflation coming down, exactly as you said, it's not like they must now, but there is a lot of room for the downside. And I completely buy the story of the market prices that said, this is not going to go higher now. We are at the peak.
Eric, not yesterday, but last week also, we had a very important decision by the German courts.
Yes.
And I know this is something that you spent a long time thinking about. Are we underestimating the long-term impact that this could have on budget deficits and how much they spend?
We are underestimating the complete mess in German policymaking because of these rules and the power of the Constitutional Court, right? So in the short term, what does it mean? It means that the overwhelming probability is a lot smaller deficit in Germany in 2024 because all these extra budgetary or gimmicks they had done to circumvent their own rule has basically been put aside. What does that mean? It means that they are going to cut stuff they can cut, and that's investment. And that has long-term negative impact because they're not going to go out and cut pensions, right? Or they can't fire people in the public sector overnight. So it's a return to some version of the Schäuble years of austerity, where you cut what you can cut politically. So it is and the deficit will be much smaller than it need to be. So it's a disaster.
Eric, thank you. We'll get much more on that. He's not mincing his words. Eric Nielsen there of UniCredit, and thank you as well to Eddie van der Walt from our MLife team. Now, coming up, libertarian outsider Javier Milei wins Argentina's elections on the promise of a radical economic shakeup. So more on market reaction with UniCredit's Eric Nielsen. That's coming up next, and this is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Libertarian outsider Javier Milei will become Argentina's next president after he beat the economy minister Sergio Massa in Sunday's runoff election. Now, Milei has promised a radical economic shakeup, including dollarizing the economy and scrapping the central bank. Well, Bloomberg's Rodrigo Orihuela joins us. I mean, Rodrigo, I don't know if it's a surprise, but certainly a lot of his policies, when he announced them, were a surprise to markets.
It's a surprise as far as the character goes. Chainsaw policies, speaking to the dogs, you know, the whole full package. As far as the actual polls go, 3 months ago it seemed he was set to be the winner, but a month ago, after the first round, his chances were much slimmer. It seemed as though Massa stood a chance. The thing is that over the last month, Massa went a bit over the top with, you know, handouts and also certain desperation to try to show he could change. And I think that's the big word you hear in Argentina right now, which is people just want to change, even though Milei seems like a really, really high risk as far as his experience and, as you say, his promises go. So in that sense, it is a bit surprising, and everybody has this expectation to see where are things going to go from here.
I mean, it'll be fascinating to see what, first of all, the things he's promised, including dollarizing the economy. I mean, that's not easy. It could create shockwaves. I mean, is he actually going to go through with it, and what are markets watching out for?
So there are two elements to this. On one hand, his promises are really outlandish in some sense. I don't think there's ever been a president or a prime minister who's tried to put these type of policies in place, and he's really convinced. He actually has the intellectual framework, if you want, to defend these ideas. However, he has about 15% of Congress support, so his power in Congress is very limited. However, he's working with the former president, Mauricio Macri, who has much more clout within Congress, and Macri wants to play the role of adult in the room a bit. The question is, will this be able to work out or not? You know, experience shows us that people outside of government trying to control the president isn't always viable. So we'll see whether Macri ends up controlling him or not. What are markets expecting? To see who his economy minister is and what are his first policies going to be. We have 3 weeks of a transition. And this is, you know, where he's going to start setting the lay of the land ahead of his government.
Rodrigo, thanks so much. Rodrigo Orihuela there on the very latest of the Argentinian election. So let's get more on what this could mean for Argentina's embattled economy with the group chief economist at UniCredit, Eric Nielsen. Eric, I mean, I guess, you know, even if some of the ideas are good, or could be good, or could be considered good because he was voted, I mean, is it even viable in this rules-based system that we live?
I doubt it, but I'm biased. I'm a macroeconomist of sort of the old school, and these sort of enormous changes, at a minimum, gives you a lot of uncertainty, and moving these bureaucracies around to do these extreme things is unlikely. But as your colleague said, to me the key issue is we are getting a president with zero experience in governance, period. Right, so that's uncertain. And he has no majority in parliament. He has no governors, I believe, and 15%. So he relies on Macri, and I can understand from an Argentinian point of view that you have 150% inflation. you're not voting for anybody incumbent, right? This hasn't been managed well, right? So you're desperately looking for something else. The problem is that something else is let me put it this way, is not hammered out in a detail where you could say, yeah, I can see a way through this. And I mean, the dollarization being your perfect example of an extremely radical move where there's no evidence that the Argentinian economy is done better by being run monetary policy from Washington than from Buenos Aires. So I'm very skeptical.
What's your take on the UK? So we have the autumn statement, and again, there was a lot of talk about possible tax cuts, but now it seems that they don't want to promise anything too soon. It has to be funded. What are you expecting from the UK as we get into election year?
Yeah, I think so. Election year, and there was a little bit of extra money in the bank now because of inflation and what have you. So they talk about the small rate cuts and the tax cuts, or whether you can have for the wealthy or for the inheritance tax or for the weaker part of society. Here's the issue. The UK collects about 40% of GDP in tax revenue. That's a 5 to 7% less than, say, Germany and many of the continental Europeans. And the British people, as far as I can see from the opinion polls, want, broadly speaking, the same social system as in Europe, and they want the same defense and military capability as almost like the Americans. So they are starting by having a hole of, say, 7% of GDP before we even get started. So this is really shortism if you're talking about tax cuts at this stage. I'm a bit nervous, but it's election year, so coming up. So
we don't know what happens. Eric, thank you so much. As always, promises are made. Some promises are kept, others aren't. Eric Nielsen there of UniCredit. More of the big stories, moving markets, coming up next. And this is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment case for this in the world.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Slice through the noise. Forget the noise. Ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point, what is the lesson or the observation?
look at some of the other top red stories on the Bloomberg terminal, and Elon Musk has dismissed reports of him being anti-Semitic as bogus and that it could not be further from the truth. Now, he sparked an uproar last week after agreeing with a post on X that claimed Jewish people held a, quote, hatred of white people. Now, the news came as a range of advertisers halted spending on X, including Disney and Apple, after a report found their ad runs next to the pro-Nazi comment. Now, Bill Ackman, though, has defended Elon Musk, saying that while he wasn't perfect, the world is in a better place because of him. And the U.S. Federal Aviation Administration says it will oversee an investigation into the explosion of SpaceX's Starship during its second major test flight. Now, the most powerful rocket in history took off successfully from Texas, but SpaceX said a flight termination system was activated as it attempted to reach orbit. Still, analysts say it was an improvement from a first test flight, which also saw the rocket destroyed after multiple engine failures. And Citigroup is set to start a round of job cuts as soon as this week. It's part of the first major wave in Chief Executive Jane Fraser's overhaul, aimed at simplifying the lender and getting rid of 5 layers of management. Now, coming up, when one door closes, a window opens, or in this case, Windows. We'll have more on Sam Altman and Microsoft next. This is Bloomberg.
There's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere.
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
OpenAI plans to hire the former chief executive of Twitch as investors and executives push to reinstate founder Sam Altman. And now Microsoft's chief executive says Altman is actually joining the tech giant instead. Plus, Javier Milei wins Argentina's presidency on a radical platform that includes plans to shut down the central bank and dollarize the economy. And the U.S. says a hostage release deal with Hamas may be at its closest yet. Meanwhile, Israel releases a video, it says, showing a tunnel beneath the Shifa hospital in Gaza City. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, OpenAI's board is said to have hired the former Twitch chief executive and co-founder Emmett Shear to lead the company. Meanwhile, the company's former chief executive, Sam Altman, will join Microsoft to lead its AI research team. Microsoft chief executive Satya Nadella is said to have initially lobbied for Altman to be reinstated at the helm of OpenAI after a sudden dismissal last week. Let's go now to Azim Azhar, author of the Exponential View newsletter and also host of our wonderful new series of Bloomberg originals called Exponentially. So, Azim, first of all, congratulations on the show and the newsletter, both really engaging. This is a crazy story. I mean, I had to take a double take on Friday when Sam Altman was dismissed. Do we understand the motivation of people that wanted him out and Microsoft that wanted him in?
That's right. Well, I think the people who wanted him out come from one of the two key factions within the AI community. There's one group that believes that artificial intelligence could become unaligned with human values and our own ambitions and survival. And there's another group that says that that risk is hugely overblown and there are many other benefits and there are many other risks we need to pay attention to. And I should say the scientific community does not have consensus on this particular question. It was the existential risk group that seemed to have won out on Friday and ejected Sam Altman with very little notice from the firm. The twist in this tale, and don't leave your chairs, don't go and get coffee as I did, is that it's moving really quickly. And Satya Nadella at Microsoft has moved extremely fast to pull off what will be seen, I think, as a business coup to bring Altman and his lieutenant Greg Brockman into Microsoft with the backing of the firm's hundreds of billions of dollars and all of that enormous compute in its Azure cloud systems to enable them to build new products and do new fundamental AI research, but directly under the aegis of the Microsoft umbrella.
But so, Azim, what's the turmoil about? I mean, I know there's a big investment from Microsoft, of course, in AI, and there's like a $13 billion bet on OpenAI and its former chief executive. But is this also, you know, like board against board, and how does it change the landscape for the sector in general?
Well, I think we will have to wait for OpenAI to disclose more about the reasons behind the timing for ejecting Altman on Friday. And the new CEO, Emmett Shear, has said that he will have an investigation underway as soon as he starts to try to unpick what went on. But what I think is clear is that the group within OpenAI that thinks that AI development should go much more slowly has won at this governance level. But that will mean that many OpenAI staffers will leave. Some will follow Sam, some will join Alphabet or Apple or Amazon, and others will start up their own companies. And I think that breaking up of OpenAI, which had become a lodestone and a center of power within the artificial intelligence field, will be beneficial in terms of competition, in terms of the rate with which new safe products are developed and the way in which businesses will be able to use them. So I think from an economic and a business standpoint, it's generally very, very interesting with quite a lot of upside.
So, Azim, when can you tell us more about Sam Altman joining Microsoft? Is it possible that you have these two factions, and I'm sure there's more than two, like the faction with conscience and the ones that want to go much quicker?
Yeah, well, I think once Sam is within Microsoft, he will have access to a lot of the resources that would have otherwise been constrained once you're in, when you were in OpenAI. And I think that they will move pretty quickly. But again, Microsoft is a firm that has a strong sense of its own social purpose. If you look at its commitments towards climate change, if you look at its commitments towards privacy, and just last week, the specific commitments they made to try to ensure that 2024's elections around the world are robust to the extent that Microsoft can do that through its tools and its infrastructure. I mean, I think that Microsoft will be quite thoughtful about the way in which it builds this technology and the way in which that it deploys them. Now, that might not be enough to satisfy the people who are on the extreme end of the safety ideology, who are very, very worried about existential risk. But I think for the rest of us, I think we would have some sense of confidence that Microsoft is a grown-up firm and is not looking to break the China shop.
Azim, I mean, this I think is a crucial question, actually. And, you know, we met with some U.S. officials last week really worried about just the fairness of elections across the world because of AI, because of some of the stories that have been pushed. I mean, as these tools, you know, generate text, generate images and computer code, like what are some of the safeguards that I guess each company will put in place for 2024? Like, do you worry about this?
Well, I think it is going to be a risk, a big risk, and I'm sure that bad actors will make use of the tools in the way that they made use of social media and the way they have used whatever's been at their disposal to weaken the underlying infrastructure that allows democratic societies to be democratic. So they have new tools at their disposal, but I think we're also aware of them. So, you know, we can expect firms like Microsoft, and not just Microsoft, to step in to monitor how their products and services are used, to be very proactive about stopping malfeasance and bad behavior. And I'm sure that they will do rather more than our government and public sector will be able to do, given that they are generally more agile and they have more resources at their disposal.
Azim, thank you so much for all, of course, of the news roundup. Azim is our author of Exponential View and host of the Bloomberg original series, Exponentially. You shouldn't miss both. So you can, of course, watch everything online. You can watch it on TV and also subscribe to Azim's newsletter. Now, the story is the focus of today's Big Take. Subscribers can read the full analysis on OpenAI on the Bloomberg terminal and on Bloomberg.com. Now, switching gears, and Moody's has raised Italy's credit rating to stable, meaning the country is no longer in imminent danger of being downgraded to junk status. The move is a win for the Prime Minister, Giorgia Meloni, after 15 months in power. Well, let's find out more on this from Bloomberg's Tommaso Ebhardt. Tommaso, I mean, this, for some, was actually quite surprising, given the debt load to GDP that Italy still has. But what did Moody's say about their decision?
Buongiorno, Francine. It's a crucial decision for the country, the one made Friday night by Moody's. It was closely watched by investors, and Moody's essentially saying that the country's finances are stabilizing, which is good news for Italy. Couple of numbers to put in perspective: Italy pays about 200 billion euros every year in interest payments. So imagine a cut to junk, how much it would cost to Italian taxpayers. Moody's clearly gave a more rosy outlook, because he not only didn't cut to junk, but also raised his outlook from negative to stable. It's clearly a win for Giorgia Meloni, also for the country itself.
So what does it mean, actually, that she can do going forward, Tommaso? Is it good politically? Can she reshuffle, you know, the cabinet and her administration because she feels stronger? Or does it just mean that markets and investors will look at Italy more in depth?
So I think it's interesting to show that Giorgia Meloni, who is the most right prime minister that Italy had since it became a republic, came with an aura of being a populist and popular. And on the other side, the policy of her government are much in line with the one of the previous administration by Mario Draghi. A few hours before the Moody's decision, we interviewed here in Milan a close ally to the Treasury Minister, Giorgetti, his undersecretary, who said that the North Star of their policy is keeping debt sustainable and looking at the debt and how investors look at Italy. So while we read the headline on Meloni's policy, who can be anti-systemic, on the other side we see the Treasury very close to what Draghi did. So at the end of the day, Giorgia Meloni's government is clearly in line with her predecessors.
All right, Tommaso, as always, thank you so much. Tommaso Ebhardt there, our Milan bureau chief. Now, here in the UK Chancellor is set to release his autumn statement on Wednesday. Jeremy Hunt says he wants to take, quote, a path to a lower tax economy. Meanwhile, the opposition Labour Party remains well ahead in opinion polls. So for more on all of this, we have our UK correspondent Lizzie Burden here with me. So Lizzie, first of all, how important is this statement from Rishi Sunak and the Conservatives heading towards the general election? I mean, everything has to be seen through that lens.
True. And we've got a 20-point poll lead for Labour, as you say, and they haven't been able to narrow it even through the party conference speech, the King's speech. So this is one of the few remaining set-piece opportunities to close that gap. But Jeremy Hunt, the Chancellor, is in a very difficult position. Yes, he's going to want to take credit for halving inflation before the end of the year. That was the government's self-set goal. He's already been on the airwaves making that case. But he doesn't want to be seen to be managing Britain's decline. At the same time, though, he's very fiscally constrained. With the election looming, you've got his Tory backbenchers clamouring for tax cuts. The question is, which can he afford without stoking inflation? So he's going to have to get a lot of political bang out of not a lot of fiscal buck.
Yeah, a lot of people say, well, he'll have to be creative in how he finds the money. But then, I mean, we had a great analysis by Eric Nielsen in doing the parallels, for example, with Germany and how much tax they have and how much they spend. What are we expecting then in the autumn statement?
Yeah, he's not only going to have to be creative about what he does, but he's going to have to be creative about how he packages it optically. We know that the Treasury is considering cutting inheritance tax. That could look very difficult optically when we're in a cost of living crisis, and we know that they're also considering changing welfare to try to encourage people out of economic inactivity to save some money as well. Maybe they'll instead go for a bigger lever like income tax, but as I say, that could be expensive and stoke inflation. So perhaps they'll pull out of the Sunak playbook and pledge to cut inheritance tax just down the line. Or maybe they'll go for stamp duty, the property transaction tax, which could be less inflationary. Maybe we'll get some clues from the Prime Minister. He's speaking later today at 11 a.m. and we're also going to hear from the Chancellor Jeremy Hunt this afternoon. He's got a fireside chat with the CBI, so I'll be heading over to watch that.
Wonderful. Thank you so much, Lizzie Burden, there with the very latest on the UK autumn statement out Wednesday. Now, coming up, the Nigerian Central Bank postponed its rate meeting for a second time since September. Plus, we also have news from Zambia. That's up next, and this is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
November 22nd, Chancellor of the Exchequer Jeremy Hunt delivers the UK's autumn statement. Will he deliver tax cuts? What is his plan to grow the economy? Can he set up the Conservative Party for a win next election? Live from the Houses of Parliament, Bloomberg Television brings you up-to-the-minute news and analysis. Special coverage begins Wednesday with Hans remarks starting at 12:30 p.m. London time. Bloomberg, context changes everything.
The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, Nigeria's central bank has postponed a meeting of its Monetary Policy Committee for a second time since its new governor was nominated in September. Investors had been looking to the MPC for signals on how it will rein in inflation that is accelerating at the fastest pace in 2 decades. Now, for more on all of this, let's bring in Bloomberg Africa's Jennifer Zabazajja. Jen, good morning. What a great day to get us started on Monday. So what is behind this latest postponement?
Right, Fran, I mean, you just mentioned there, I mean, there's been a lot of eyes that are paying attention to what this MPC meeting was going to be on Tuesday, because as you mentioned, in October, we saw inflation quicken to the highest in 18 years, reaching an 18-year high. And so the expectation was really that we were going to see the new central bank governor, who was recently installed into this role, potentially hike interest rates tomorrow. Now that meeting has been postponed to an undetermined time, and it's causing a bit of concern. I mean, as we mentioned, of course, inflation is top of mind, but there's also expectations for inflation to increase even more. Barclays even estimating it could reach 30% in the next few months. There's also the issue of the Naira depreciation and the currency issues around the Naira. And so all eyes were on this Nigeria NPC and really on a number of other African economies and central banks that were potentially going to deviate from what we've seen in the Western world and elsewhere, and hike interest rates. And so the fact that this meeting is now being postponed, the questions are, you know, what does that mean then for inflation and really for monetary policy going forward? Now, just on that note, there were some expectations that if the central bank were to have the meeting tomorrow on Tuesday, they were potentially going to raise interest rates between 25 basis points and 325 basis points. So definitely something that a lot of analysts were paying attention to. Now we're going to wait to hear from this new central bank governor, where he is potentially going to be speaking at an event on Friday, though still unclear when we're going to have that official MPC meeting on the books again.
Jen, we've also have news from Zambia. So what happens now with the restructuring negotiations?
Right. So it's a bit of a stalemate right now, Fran. I mean, it wasn't too long ago that we were applauding the fact that Zambia had reached an agreement with the official bondholders. Now what we're hearing from their official creditor committee, which is co-led by China and France, is that they're not accepting the terms of the Eurobond deal. So in particular, they're saying that the specific agreement is not comparable in terms of what the haircuts that they were having to take on. And so now it sort of leaves this restructuring plan of nearly $3 billion. There's questions about what's going to happen next. And there's questions about, you know, where Zambia's restructuring of the economy and the path forward, what that looks like, and also what this means for other countries that are under similar terms of this G20 common framework, what that means, because there's still very clearly a divide over how different lenders and different creditors take haircuts when it comes to this debt restructuring. But a lot of surprise there, and we're still waiting to see really where the next shoe is going to drop when it comes to Zambia restructuring. But very important when we think about debt restructuring in the African continent, because Zambia was the first big African nation that defaulted on its debt. So we're going to pay attention to what happens next and how this unfolds between the lenders.
Jen, thank you so much, Jennifer Zabazajja there in Johannesburg. Now, lots of news from the continent this morning. The German Chancellor, Olaf Scholz, announcing more funding for climate projects. He meets with African leaders in Berlin today, including President Tinubu of Nigeria. Now, here's what else we're looking out for today. BOE Governor Andrew Bailey will give the Henry Plum Memorial Lecture on food security. Tomorrow we get FOMC minutes, and then later in the day, NVIDIA releases its third quarter earnings. On Wednesday, the UK Chancellor Jeremy Hunt delivers his autumn statement. On Thursday, it is Thanksgiving. U.S. markets will be closed, but in Europe, the ECB releases its October meeting minutes. And then finally on Friday, Germany's IFO survey results come out, and the Black Friday weekend begins. Now, this is the latest news on Sam Altman. It's certainly been an eventful 3-4 days. Brockman will be joining Microsoft. This is according to Mr. Nadella. And you can see Microsoft pre-market gaining some 2.5%. Coming up, the latest on hostage negotiations as Israel releases a video of what it says is a Hamas tunnel beneath Gaza's largest hospital. More on the Middle East next. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The U.S. says the deal to release hostages taken during the Hamas October 7th attack on Israel may be at its closest yet. This comes as Israel releases a video. It says proves the existence of a Hamas tunnel beneath Gaza's Al-Shifa hospital, which the military raided last week. Well, Bloomberg's Mark Champion joins us now on this latest story. So first of all, Mark, what do we know about the hostage situation?
We don't know much for certain. What the Washington Post initially reported was that the deal is close, that there are roughly 50 hostages involved who would be released, women and children, that what would be tied to that is a humanitarian pause in the fighting, some 3 days to 5 days. But there is no deal as yet. The U.S. administration has said so. The Washington Post actually had to correct its story. We wait. These talks have been going on for a long time.
Mark, if Israel doesn't actually minimize civilian casualties, do they start losing the sympathy of everyone around the world?
They already have. I mean, this is a real problem for Israel, I think. They have, the initial sympathy that was there for the horrific attacks on October the 7th quickly began to erode. The numbers, upwards of 11,000 now Palestinian civilians who've been killed. It's a very significant problem for them. It's a problem for the United States. You just had to read President Biden's op-ed to see how he's trying to balance everything, at the one time stay behind Israel and the tactics that it's using, and at the same time to put pressure on them to stop.
You understand this, better than most, and also some of the military tactics. I mean, with the ground offensive, can you minimize, casualties more than bombs? With either, any urban warfare tends to involve high civilian casualty rates. And this is a more densely, populated area than most. Certainly they could have done more at the beginning when a lot of these casualties were incurred. They could have waited with the air campaign until they had moved people out. Most are now out, but at the time that the air campaign was done, it wasn't. These things are catching up with the Israelis. We also, Israel actually released this video that we just showed, showing some of the tunnels. Is this to gain sympathy? Like, how necessary is it that people understand what we're looking at? It's
critical. So essentially what the Israelis are saying is, look, we're sorry, we have to do this. The civilian casualties are not our fault. It's the fault of Hamas, and there's a great deal of truth to that. Hamas, conducted this operation in the full awareness and with the desire to get the Israelis to come in. It is a part of their planning, but the problem for the Israelis is that they have to show that indeed Hamas is underneath the hospitals, underneath civilian infrastructure, which then at least gives them some kind of rationale for the death toll, and to say that it's Hamas's fault. The problem really is that what they've shown so far is well short of what they claimed.
Thank you so much, Mark Champion, there with the very latest on Israel-Hamas. Up next, Bloomberg Brief, Danny Berger in London, Manus Cranny in New York, and this is Bloomberg.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO, and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
In London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai. Good morning, everyone. Have a great evening.
Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Silicon Valley shakeup. OpenAI taps former CEO of Twitch as Sam Altman joins Microsoft. We've got the latest in the boardroom drama. Javier Milei opens a new era in Argentina. The outsider wins the nation's presidency, promising swift measures to pull the economy out of crisis. And bonds post their best month since March, as the rally is set for its big test with today's 20-year auction. A very good morning. We'll know whether we've got indigestion in the bond market in a moment, but we've 3 weeks of velocity, all built on a peak Fed narrative and a pivot in March. 30% probability of a rate cut in March. Green on the screen this morning. You're breaking through that big psychological barrier of 4,500. I mean, built on what? Soft landing, Goldilocks, immaculate disinflation. Take your choice. Since the end of October, we're up 12% on the NASDAQ. We're looking at stocks like Amazon up 20%. The Nikkei, that kissed a 33-year high this morning, but get ready for a little bit more volatility. Money flowing in, $27 million flowed into the VIX ETFs. That's the 7th straight week of where you're seeing that kind of money roll in. Bank of America's Hartnett says that on these markets, you want to sell this epic rally. Keep an eye on Microsoft. It's up this morning. Sam Altman is to join Microsoft. What does that mean for AI? Is it still worth $86 billion? Stock 600 up a small pip or two this morning. We've got a warning from the ECB. Wunsch warns markets are taking too optimistic view on rate cuts. And Goldman Sachs say you want to be overweight growth stocks in Europe. That takes us to the SMI. Down this morning, you're looking at Julius Baer under pressure this morning, down 9% at one juncture. They are warning very, very clearly profit will be crimped because of provisions of 80 million Swiss francs. Danny, good morning.
Good morning, Manus. Well, it is the run-up to Turkey Day, at least in the U.S. Maybe people will be spending less on their turkey, maybe because of Ozempic, maybe because the economy is weakening. All of that soft data we've been getting has been hammering the dollar. It is lower again this morning by about 0.4%. We're trading at an August low off of those bets of a rate cut, 30% odds that we will cut, the Fed will cut by March. We also heard from Barr over the weekend on Friday saying that essentially we might be at the peak or near the peak of rates. That's also been putting pressure on yields, but for the morning, they're moving higher just by a basis point, not by a lot at this moment. But as you mentioned, Manus, we're going to get the test in the form of $16 billion worth of a 20-year auction today. Meanwhile, European nat gas futures have jumped at one point. They were up by more than 4%, by more than 6.9% off the back of the Iran-backed Houthi rebels seizing a vessel in the Red Sea, reigniting that fear of a wider conflict in the Middle East. It's also cold, and we're going to have an OPEC Plus meeting with Manus shipping off to Vienna for covering that for us. But Manus, ahead of that, the showdown is set up. We've both mentioned this. Very different opinions of where the global rate cycle is at the moment. Barr, as I said that we're near the peak or at the peak of the tightening cycle. But Wunsch, just an hour or so ago, saying that the very fact that we're pricing in rate cuts, that everyone pricing in rate cuts, makes the ECB more likely to do the opposite and hike to tighten conditions.
Yeah, I mean, look, this is the conundrum for every central bank out there. If these markets get way ahead of where they want to be, that's why they've got to try and restrain, curb our enthusiasm. But of course, the debate is this, Danny. It is about real rates. And you see this most dramatically in the US, where the real rates have rolled over. And to that extent, that is where the dollar is front-running a structural change in rates next year from the Federal Reserve. We'll put that to Kit Jukes in a very short time. The precipitous drop in real rates is at the end of King Dollar and that splendid dollar trade. Let's turn back to the tech drama, because Sam Altman is headed to Microsoft. The former OpenAI CEO gets replaced by the former CEO of Twitch. Microsoft's Satya Nadella announced the move on LinkedIn in a post writing, quote, "We're extremely excited to share the news that Sam Altman and Greg Brockman will be joining Microsoft to lead a new advanced AI research team." What does that mean for the valuation of AI? And what does it mean for Microsoft? Alex Webb joins us to disaggregate that. So my first question with Danny this morning is, is alt AI then still worth $86 billion? Let's start there.
It really depends who Sam Altman takes to Microsoft with him. As things stand, I would say probably yes. They've got a huge amount of technology. They have a huge amount of talent. Talent is the key word here. There is not a huge amount of top-tier AI talent out there in the marketplace. There's a huge amount of support, it seems, judging by social media posts, for Sam Altman within the ranks of OpenAI. If he brings some of that talent with him to Microsoft, then, of course, the effect on OpenAI's valuation would be hugely deleterious.
I saw on Twitter somewhere, which I thought was really funny, when there was talk about Sam Altman coming back. It's like one day getting fired and being brought next is the Apple and Steve Jobs of the TikTok era sped up so much. But I think it kind of encapsulates how odd this is. It moves so quickly over the weekend. Can we just get back to the kind of basic thing here, Alex? What happened?
Well, to the extent that we know, and I do recommend everybody goes and reads The Big Take on the Bloomberg Terminal on Bloomberg.com by my colleagues Max Chafkin and Rachel Metz, it's really to do with AI safety. That seems to be the smoke signals coming out of the board of OpenAI, which is a lot of people on that board. They are seem to be relatively closely aligned with the effective altruism movement, which is all about actually kind of making sure that AI is safe, using the profits from business in order to, in theory, improve the world. Something that Sam Bankman-Fried was closely aligned with as well. There seems to have been some concern about whether that was still happening at OpenAI, at least in the eyes of the chief scientist and the board. That seems to have been what prompted this coup. When you look at it, though, it doesn't seem as though the coup itself was massively well thought through, perhaps. They got him out, but if he can go to Microsoft, then perhaps he didn't have a non-compete. It's very, very curious.
Yeah, I said the same exact thing to Manis this morning on that non-compete issue.
So where does this leave us? I mean, do we think then that Microsoft's going to, and I said alt AI, OpenAI, excuse me, do I then extrapolate that the CEO and the chairman have now gone to Microsoft and we're going to have, I mean, they've tried for 20 years to build their AI, and that's the whole reason of why they jumped in with their investment into OpenAI. So how do you extrapolate? How do you think the market will extrapolate this?
So if you think about this landscape right now, the AI is a cloud product. It is not necessarily that people are going to pay top dollar for the AI tools themselves. They pay top dollar for the processing power that is needed in the cloud to make them work. So Google, Microsoft, and Amazon are the three big players in the cloud. Google has its own captive AI arm, Google DeepMind. It owns that company 100%. It can do whatever it wants with it, more or less. Microsoft has a very close relationship with OpenAI. It does not own it. It has a 49% stake, gets a lot of preferential treatment, first dibs. It does not own that company. Amazon has an increasingly close relationship with Anthropic, that was a company founded by a bunch of people who left OpenAI. If it can now build its own captive AI arm, Facebook, Meta also has one, but it's not really in that cloud space in the same way, then it's actually a huge boon to Microsoft, because it means they own all the IP, they can do what they want with it. It is not just a close relationship with the supplier, they have their own division.
What does it mean, though, for them to be having this own division and still owning 13% of OpenAI? Is there not some form of cannibalization with that?
Well, 49% and the $13 billion.
Yes,
yeah, exactly.
Thank you.
Well, I would tend to suspect it's the opposite, right? It means, because, look, even if they hire the whole OpenAI team tomorrow, it's not going to happen, but just for argument's sake, if they were to do so, it would still take time to build all this technology themselves, right? What this gives them is a runway. They have the access to OpenAI's technology, over time, they can start to build up their own internal capabilities. And at the same, even as they have access to what OpenAI does, it kind of looks like, and then maybe we might find more comes out in the wash, which will undermine this view. It kind of looks like Satya Nadella has played an absolute blinder and in picking up the most beneficial outcome from this weekend hullabaloo.
Which is so interesting because, of course, the reporting was that he was caught out by surprise by this whole thing, so maybe masterfully handled by surprise.
Yeah. I mean, look, he's a tremendous deal maker, Satya Nadella. We've seen over the years he's done some really smart deals at Microsoft. This increasingly looks like he's one of them.
Alex, thank you very much. On the saga of OpenAI, that's Bloomberg's Alex Webb. All right, let's get some of the other top stories which are trending on the terminal this morning. Now, Elon Musk has dismissed reports of him being anti-Semitic as bogus and that it couldn't be further from the truth. Last week, a Musk post endorsing anti-Semitic content provoked outrage and alienated advertisers like Apple. The FT reports that several ad executives are urging ex-CEO Linda Yaccarino to resign.
Well, Bayer is suffering its biggest drop ever after a major legal and drug development setback. The German pharma and agricultural company stopped the main study of its top experimental medicine due to the lack of efficacy and lost a key U.S. trial against its weed killer Roundup.
And Bloomberg has learned that Chinese regulators are drafting a list of 50 developers eligible for a range of financing. This is the latest effort from China to put a floor under the property crisis. Manis.
Coming up, we're going to catch up with Kit Jukes, Chief FX Strategist at Societe Generale. Is it the end of King Dollar, Danny?
And Javier Milei wins Argentina's vote and promises to fix decades of policy mismanagement. We're going to have more on that later this hour on Bloomberg Brief.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Bloomberg Brief. I'm Danny Berger in London. Manish Cranny is in New York. Now, the ECB left interest rates on hold last month for the first time in its tightening cycle, and markets are betting on the central bank and the Fed and the BOE that they will cut next year. But Governing Council member Pierre Wunsch said this morning that is it a problem if everyone believes we're going to cut? It increases the risk that you have to correct in the other direction. Joining Manis and me now is Kit Jukes, Chief FX Strategist at SocGen, taking a break from preparing for the holiday season. So, Kit, I mean, this sentiment from Wunsch is something that basically everyone has been talking about, that the market rally has gone too far and will cause the Fed, the ECB, you name it, to reverse. Is that threat real right now?
Increasingly not, I would have said, in fact. So, I mean, you can't be sure about the Fed because this is just this extraordinary cycle that kind of keeps on reviving itself. But I would say there's enough signs now of underlying slowing that the excess savings pile is gradually being unwound into this Christmas season. The labor market is beginning to weaken. So I think I've seen enough to think, no, this is going to slow. The question is how much. And in that sense, it would be hard to turn that boat around. In Europe, we haven't had any growth all along, right? Europe, I mean, it's a 0.1, a 0.2 here for growth. It's recession is not that likely because when you're moving that slowly, it's hard to crash. It's to be sort of almost simple about it. But I don't think you can have a level of interest rates where suddenly there's enough borrowing and easy conditions that gets in the way of rate cuts in Europe next year. They will hold on with rates here for a long time. Maybe until sort of the fourth quarter of next year, but I don't think the idea they'll have to hike again. I think that's just kind of they don't like what the market's pricing.
Well, maybe his comments were just sort of like overambitious in terms of the ability for the economy to propel itself on easier AFCON. But here's the question then that goes through the mind. If you look at euro dollar, it's rallied by what? Just over 4% since the end of September. You're looking at euro yen, it's rallied by 5.25%. I know yen has its own idiosyncrasies. Is that rally just all about dollar weakness, or is this Table Mountain for the euro rally?
It will be Table Mountain at some point. Let's put it this way. I think we've had a series over the longer term now of lower highs in euro dollar, and we're going to get another lower high. We're not going to get a new lower low for a while, but I wouldn't get too excited about it. I think there's other currencies that can do a bit better than that, but you have to view that in that sense. U.S. exceptionalism's taking a break because the economy's slowing. We've had more sensitivity to short-term interest rates driving the dollar than we've had for ages, and that's faded away. But we're not going to see the dollar weaken dramatically unless someone else can get some serious growth.
But you said there are other currencies who can do better. Who is the ultimate beneficiary of what the dollar's doing now?
In a horrible, bumpy way, the biggest beneficiary is going to be the yen, because this is all about, this is all about interest rates, and dollar yen's moved with U.S. yields. The more they fall, the more dollar yen will go back the other way. And B, you've got a bunch of things happening in Japan. This might work. I mean, they might be the people who come out of this period having defeated deflation. They have companies who are making record profits. They have, I don't know, you read articles of, that they're changing the way their economy is structured away from the big firms towards smaller firms with more interesting wage packets for people. There's a lot of good things could sort of continue. And if that does continue, then dollar yen doesn't belong anywhere near 150.
Well, if it doesn't belong, I was going to ask you about real rates, but you said it doesn't belong anywhere near 150, so let's go with the flow on that. I mean, PIMCO are building their position in yen. They're buying yen. They're preparing for 140. You think 150, it doesn't belong there. How much further below 140 does it belong then on the thesis you've just espoused?
I think 130's very reachable in the next 18 months, to be honest. I just think it's going to be horribly painful to trade, but I think it's very reachable. You've got to remember,
does it take them to blow YCC off to get to 130? I know Danny wants to jump in here. So briefly, does it take YCC to get blown off to get to 130?
Yes, definitely.
Did I just hear you were going to make a martini analogy?
I wrote about martini indices around the world at one point.
Wait, what is that? Just pricing of martinis?
Yeah, currency valuations on martinis.
Tell me, what is a Duke's martini right now? What does it tell us about the UK?
It doesn't do anything terribly surprising. It tells you that using a major chain of hotels, the most I paid for a martini was in Zurich, and the least I paid for a martini was in Tokyo. And London was pretty pricey too, but then, if you go to the Churchill bar, you're going to pay up for your martini.
Yeah, that's true. It depends where. Wait, Manus, I just want to put this down into the record because I think we had Paul Donovan talking about a beer index. Now we got a martini index. I want to know when like vodka soda index is coming, tequila. So I don't know what the next index is going to be for us.
Yeah, but all I can say is, Kit Jukes, it is 5:18 p.m. in Hong Kong. It's 5:18 a.m. in New York.
5 p.m. somewhere.
It's 5 p.m. somewhere. That smoking jacket, you're ready for a martini any time of the day. That's Kit Jukes with the Martini Index live on Bloomberg Brief. I mean, the dimensions of this show, they take turns every day. Okay, Jukes, off you go. 130 is his call on dollar yen. Let's have a snapshot on where the currencies are. There's no way dollar yen belongs at 130, according to Kit Jukes. Across the assets this morning, across the FX assets, you've got the dollar. Real rates are dropping. The dollar is down by a third of 1%. And yen, 148.40. 130 is on your cards for 2024. Good morning.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. We will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support because we are the best investment case for this in the world.
DOJ or other authorities
could face bigger challenges next.
It was going to keep reading World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Brief. I'm Danny Berger in London. Manus Cranny is in New York. So, Manus, a London-based insurance firm came out with a new estimate of the cost of having the World Cup in Qatar during the winter. They say that the top 5 European leagues spent $767 million in injury costs. That's up 30% from what it was the year before. And 2 months after the World Cup, there were 49 injuries in the Premier League and 56 injuries in the Bundesliga.
Yeah, and of the 417 players involved in the World Cup, 225 injuries between November 2022 and February of this year. So you are looking at time, you're looking at the opportunity, and it was the English Premier League that took the biggest hit. I'm just looking at the data here. 40% of the cost over the 5 leagues in the 2 months after the World Cup in Qatar. 49 of those injuries, 49 of those were in the Premier League. I took an injury myself.
I was going to say, Manus, I think we are very lucky that Bloomberg's top player ourselves didn't have to go on the sidelines from the huge stunts, the huge feats he pulled off at the Qatari World Cup.
There was no expense for it. Here you go. Look at that. You see? Yeah.
Did you have to get checked for a concussion after that, Manus? Did they have to do, you know, the little eye test afterwards?
No, but I can tell you what. You see, actually, I mean, the amazing thing about Qatar, actually, I was there 9 times last year. When people say the word Qatar to me, it's sort of, you know, I'm all over Qatar, which is the phenomena that was the World Cup. It was executed seamlessly. You literally zoom in through the airport, zoom out. But the cost of that ball, I mean, that is a unique football. I sent the producer, I said, I want a ball. And she came back with that tiny little thing.
Wait, can we look at that again? Because here's the question I want everyone to answer. Is Manus a giant or is that ball small? I'm not really certain, Manus. I think you might just be like the tallest human ever, and that's actually a normal size football.
No, do you know what it was? It was one of those things, you're waking up. This is every producer's nightmare. He wants a ball. What does he want a ball for? Yeah, it was that. Yay! It was a moment of victory. Listen, who's got the victory in you're very generous there now. Okay, I think we've had enough of me knocking the ball around, so let's take that away. Who's the winner in AI?
All right, you want to talk about the winners in AI?
I do.
Maybe
I want to move on.
Right?
Less about me and more about AI.
You want to move on, I get it.
Go on.
I get it. So sadly, we don't have tape of Manus like interacting with ChatGPT or something to show you all. But yeah, the drama is all about OpenAI this morning, isn't it, Manus?
It's what is the value of Microsoft now? Is this, I like the way Alex sort of wrapped it up for us, which was, could this be sort of a triumphalist moment for Microsoft where he gets Sam Altman and Brockman on board and they build their own center of excellence in AI. We know that part of the great angst within OpenAI was the accelerated pace with which Sam Altman wanted to deliver AI, or we believe that's part of the angst.
Yeah, and that board we showed was the Friday close. Since then, Satya Nadella announced that Sam Altman and the board chair would be coming to join them, Microsoft shares are up 2 1/3%. So maybe Microsoft gets the best of both worlds in this outcome from the shakeup over at OpenAI.
Well, we'll put all those questions to our reporter in the next 30 minutes. Don't cry for me, Argentina. Javier Milei is the new president, and the promises are to fix decades of policy mismanagement. We'll discuss on Bloomberg.
What do you consider to be the biggest challenge?
Infrastructure that supports trade is the biggest challenge. Our senior brother, President Adesina of the AfDB, estimates the annual deficit, infrastructure deficit in Africa to be over $100 billion. But that over $100 billion is actually also an opportunity for investment. So it is a massive, significant challenge that we are confronting. And my fear is that we may succeed in establishing a very effective legal construct and a very effective legal foundation for trade liberalization and investment liberalization in Africa. But all of that will come to naught if the infrastructure deficit is not addressed, because you will need the goods to move somehow, and you will need to have good trade corridor connectivity, ports, trade corridors that connect countries that are landlocked to the ports.
Welcome back to Bloomberg Brief. I'm Menace Crenny in New York.
And I'm Danny Berger in London. Here's what you need to know. Silicon Valley shakeup. OpenAI taps the former CEO of Twitch as Sam Altman joins Microsoft. We got the latest on this board drama. Javier Milei opens a new era in Argentina. The outsider wins the nation's presidency, promising swift measures to pull the economy out of a crisis. And bonds post their best month since March. Now the rally is set for a big test with today's 20-year auction. So it's $16 billion that are on deck after a strong month for bonds. Can it hold on? Well, when it comes to the Bloomberg dollar, it is weakening, down about 1/3% off the back of that softer data, off the back of Michael Barr talking about the idea that we are at or near a peak. Now, we're just talking to Kit Jukes earlier in the hour, who said he's seen enough. The data is softer. They ain't going to hike again, even though Wunsch talks about that maybe they are going to hike because the markets are pricing in cuts for the ECB. So your 10-year yield, that's higher by just under 2 basis points, while European nat gas futures jump. They're up just under 3%. We're going to talk with Bobby Ghosh about this shortly. At one point, they were up 6.9% after the Iran-backed Houthi rebels seized a vessel in the Red Sea. Man, it's really reigniting that fear. Is the conflict in the Middle East going to spread further?
Yeah, well, this is the very issue that we brought to the Iranian foreign minister. Of course, he sidestepped it and got rather vexed by the whole conversation in terms of where they would deploy more to. More with Bobby Ghosh in just a moment. You're entering into the 4th week of velocity on the upside for equities. Can that endure? Soft landing, Goldilocks, immaculate disinflation, whatever it is, you're breaking through some of the highest calls on the S&P 500 for the end of the year. So you're breaking above the 4,500 level, up 3.5 pips. You'd hardly call it dramatic, but the NASDAQ is up 12% since the end of October. You're looking at Amazon up 20% since the end of October. Money is flooding in to the VIX ETFs, and of course, Hartnett over at Bank of America had said, sell this epic rally. Stocks in Europe this morning, they're just managing to hold on a very slight bit of green. You got Wunsch warning that markets are too optimistic on 100 basis points of cuts that are priced into the European complex for next year. So we have a little hint there. Julius Baer is the weight on the shoulders of the SMI this morning. This is the smaller private bank on Bahnhofstrasse, down 10%. They have exposure, we understand, speaking to sources. They're writing down some of their exposure to the retail empire of the Austrian tycoon René Benko. So, Danny, that's the drag on the SMI. This is their interim results. They never really speak to the press. We have asked for an interview with them. At the moment, it is the SMI that takes the weight on the downside this morning with Julius Baer. Danny.
Yeah, and maybe, you know, the SMI, the Julius Baer shares are down, but overall, man, it's been a blockbuster run for stocks, as you pointed out. And that kind of gets to what we were talking about Kit Jukes about. He said he's seen enough. The data is softening, and we will see cuts next year for the ECB. Maybe it's 4th quarter. But on the other hand, the market has bought the soft landing narrative, despite the cuts that they're pricing in. So Kit says it's kind of the end of the run for the dollar, but is it the end of the run for the stock market, too, in that context?
Yeah, look, you've had a fairly good run. The question is, real rates are rolling over. That's where the real vexation is for the dollar. We've got this monster risk on narrative in equities, in bonds. It's the first positive month in bonds that we've seen all year. So I think all of those factors go into part of the reason of why you're just seeing a little bit of an offer on the dollar. But geopolitics, that's what the next 30 minutes is about. Well, not all of it. We'll have a little bit of AI as well. But for now, it is about Javier Milei, the next Argentinian president, beating the economy minister, Sergio Massa, in Sunday's runoff election. The libertarian outsider has vowed to slash inflation, take a chainsaw to the state. Speaking to his supporters on his victory, he hailed the result as, quote, a miracle.
Today is a historic night for Argentina. Thank you very much to everyone who came. Thank you to everyone who made this possible. Thank you to the team that has been working for 2 years to transform Argentina and to achieve the miracle of having a liberal and libertarian president. Thank you very much.
Many before him promised a miracle of dollarization, of breaking inflation. Can this president do something different? Bobby Ghosh is our Bloomberg resident opinion columnist on a Monday morning. Here we go. Can he do something spectacular? Many presidents have tried. What's the risk?
Well, the risk is enormous. It has to be said, he is an economist. He's the first economist to be elected president of Argentina, and not just in theory. He's a practiced economist. He's been senior economist to banks, to financial companies. So he does have some chops, but he's an economist of the liberal school. He believes in the Austrian school of sort of individualism, that libertarian idea. He said he's going to scrap the central bank. He's going to dollarize the economy. He's going to cut vast sections of the state out, and all of this sounds wild and even exaggerated. But he is serious. These have been his consistent positions for quite a long time. The question is, does he, not just whether he wants to get this done, the question is whether the economy can wear it, whether the economy has the strength. Because what he's proposing, dollarization, for instance, if you look at the figures, they just don't have the reserves to pull that off. So can the state actually bear the weight, the pain that he's proposing? And secondly, and this may be as important, does he have a team? His party has a handful of seats in parliament, which means parliament is going to be sort of a mess throughout his presidency. But he has not really pulled together a team of people that he has been able to say, this is going to be my cabinet, here are some serious people. And international investors, Argentinians will be looking at that, and now they'll be wondering, okay, we've elected this guy. Populists, as we've learned elsewhere in the world, very good at winning elections, not very good at actually running countries.
Well, what does the government actually look like if he can't pull a team together, if he can't actually get this kind of stuff done? Is it Argentina in paralysis?
Well, yes, it could very well be. This is a huge leap of faith that the Argentinians have taken. Now he could go two ways. One is he could try to pull together a kind of government of known figures, people from within the establishment in Argentina, but that's not his style. His style is, and his whole persona is, I'm anti-establishment. So the chances are that he will pull together a team of outsiders, people that have never really had that much experience in running a country and running an economy. And if I were an investor in Argentina, that would be something that would concern me enormously.
Let's see. I mean, the markets actually, ironically, are closed today.
Monday's
so
holiday,
we're not going to find anything new on that. Danny mentioned the price of natural gas in Europe. It's spiking a little bit higher this morning. I want to get your sense of where we are. This is Houthi rebels, we understand, seizing a Japanese chartered vessel in the Red Sea. In of itself, what does that signify?
Well, the Houthis are a kind of, they've evolved over the period that I've been traveling in Yemen from a sort of ragtag rebel force into quite a sophisticated force that is backed by Iran with quite sophisticated weapons, including, it would appear, some helicopters, but also missiles and rockets and drones. So they're capable of doing quite a lot of damage in one of the world's most vital sea lanes, which is the Red Sea. They have said over and over again since the fighting in Gaza began that they intend to do damage on those shipping lanes. They put out these very slick videos of blowing up ships and so on. This particular ship, it was a car carrier. It was not an oil or gas carrier. It was empty. It was going from Turkey to India. It's owned by a British company that in itself is part owned by an Israeli shipping magnate. And that's their plan. The way the Houthis are playing this is, we're hurting Israel. And it's consistent with their overall political messaging. Death to Israel has been part of their sloganeering for now over a decade. They are maverick. They are sort of a little unpredictable, but they're very much under Iran's control. So for all that Iran says, and I remember your interview with the Iranian foreign minister, for all that Iran likes to say, oh, we have no control over these people, I'm sorry, I don't believe that for a second.
And the oil market was really quick, Bobby, to price out any war risk premium. Does this incident show that maybe that happened too quickly?
If this were an oil carrier, I would be very concerned. If there are Israeli-owned or even Israeli part-owned oil/gas carriers in the Red Sea, I would be concerned. Beyond that, I think not quite yet. The Houthis have, to use a naval term, fired a shot across the bow. If they take this up to one more level, then I think we'll see those oil prices being reconsidered. For now, I think the main concern is what happens to the 25 crew members on that ship and what happens to the ship itself.
I think it's if there's an evolution in Strait of Hormuz, that perhaps that's a more of an invective for the oil market. The case on the hostage and the hostage negotiation, I mean, on social media yesterday, there were protests at the front door of Bibi's office. This is the streets of Israel feeling left out of what's happening inside the government of power. But where are we in terms of hostage negotiation?
So over the weekend, there have been conflicting messages. There were reports, including in the Washington Post, to suggest that a breakthrough in hostage negotiations were about to happen.
Yes.
More than 50 women and children would be released in exchange for pauses in the fighting. Israel would agree to pause the bombing of Gaza for specific periods of time and release some Palestinian prisoners who are in Israeli detention. The White House then came out to say that we have to manage these expectations and saying we may be on the verge of a breakthrough, but not quite yet. When you're dealing with a group like Hamas and when you're dealing with inflamed opinion in Israel, it's very difficult to conduct any negotiations, and it's very difficult to believe in anything until it's happened. So my view on this is this would be fantastic if it were true, but I'll wait to actually see those hostages walk across the border before I get my hopes up.
Right. Okay, we're going to have to leave it there, Bobby. Really great to get you in this morning. Bobby Ghosh, thanks so much. Now, coming up, we're going to dive deeper into the shakeup at OpenAI, Sam Altman's new position at Microsoft. But, man, it's a big week for AI. You know, we got NVIDIA earnings tomorrow, too.
Yep. The question the market will ask itself is Sam Altman joining Microsoft. Bobby just sat down in the chair. He said, actually, man, this story is really all about two leaders, which is Satya Nadella versus Sundar Pichai, who won. And at the moment, it looks as if Satya Nadella is 1-0 in the AI score. Microsoft pre-market up 2%. And Meta, of course, what does it mean for the rest of the field in regards to AI? Does it open up an opportunity? Meta up 0.25% right here on Bloomberg.
reception, the acceptance of Porosangue has been extraordinarily high. We had to stop the order for a while because we had to understand how to manage the supply chain. So there is a strong traction of Porosangue all over the world.
How much do you worry about increasing production and therefore becoming, I guess, less high-end luxury?
We are making 13,000, 14,000 cars per year. We will not grow a lot in the future because we want to grow more for value, not for volume. And maybe one number, you know how many cars Ferrari did we put on the road since the beginning, since the first one? 250, 260,000. So 250,000 cars in a market where there are million and million of cars every year.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's your Monday edition of Bloomberg Brief. I'm Manish Krani in New York. Danny Berger alongside me in London. So the Prime Minister is making a speech, Danny, this morning about tax ahead of the autumn statement, and this is it. We can't permanently have bigger government, but of course vowing to cut tax, reward hard work, of course the very conservative ethos and the very core of conservatism, and build domestic energy. We want to cut taxes carefully and sustainably. So this is about dangling the carrot in an election year as we see it of tax cuts. But what kind of tax cuts, Danny? Good morning.
Good morning. Yeah, the fear and the memory and the PTSD of the Liz Truss tax cuts will certainly be alive in everyone's memory of what happened when the gilt market seized after that. So Jeremy Hunt, for example, I was watching him on the Sunday shows, is being very careful to say we want them to be lower, but we want to do so in a responsible way. So it's trying to, again, as you say, dangle that carrot without causing the market to seize up again as inflation still grips the UK.
Well, let's see how the gilt market reacts to that. You're just looking at cable at the moment. It's a little bit higher on the day, but that's more to do with dollar weakness rather than strength. Yeah. 124.76 up an eighth, or 14 pips at the moment. Back to our top story, OpenAI and the ousting. The ousting of the company's former CEO. He's set to join Microsoft, along with the former president, who quit on Friday. Satya Nadella posted this on LinkedIn. We're extremely excited to share the news. Sam Altman and Greg Brockman, together with colleagues, will be joining Microsoft to lead a new advanced AI research team. What does it mean for Microsoft? Azim Azhar is the author of Exponential View newsletter and host of Bloomberg original series Exponentially. Well, it's an exponential move for Microsoft. Good morning. What does it mean? What's your first take? Good to see you.
It's going to make a great movie. Good morning to you, Manis. I think what it means is that Satya Nadella is demonstrating some really fearsome capabilities as a CEO. He took a big bet on OpenAI a year or so ago, and it started to play out. Microsoft has a lead over its big tech competitors in putting these products into its existing suite of services. And then we had this implosion on Friday with the ouster of Sam Altman. It was very, very surprising. And within 48 hours, Nadella has secured, in a sense, Microsoft's AI future by bringing Altman, his lieutenant Brockman, and no doubt many dozens of staffers into the Microsoft fold with access to all of Microsoft's compute resources and all of the capital that the firm can deploy at a new group like this.
What does OpenAI look like in that future, Azim? Is it just an empty shell with everyone gone to Microsoft?
Well, the mood at the moment is that it may well be an empty shell. There were two camps in OpenAI. There was a camp that was really, really focused on delivering products, AI products, out into the market. These are people aligned with Sam Altman, and that had grown a lot since ChatGPT emerged not even a year ago. And there was a core camp that is deeply, deeply concerned with the existential risk of artificial intelligence to the whole of humanity. And it's that latter camp that won the boardroom coup on Friday. And in a sense, they're the go slow group. So the go fast people are likely to move, and there seems to be a lot of support on X, formerly known, or Twitter, I guess, for people to move to Microsoft and follow Sam Altman. And what I think that leaves in OpenAI is a group of people who are going to move much more slowly, much more methodically, and that may make it less relevant, certainly for enterprises in the coming year or two.
So what does that mean if I mean, you talk about the velocity of the concept of AI. What does it mean for you, me, the world, our safety? If you hitch up Microsoft with Sam Altman and Brockman, do I need, as a humble human, do I need to demand more from my government to regulate AI to protect me? I mean, the velocity of Microsoft, Satya Nadella, Brockman, all together, should I be more worried or more excited?
Well, I think we should be more excited because this debate is now in the public eye. So if we just left it and ignored it and made no changes, I think it would be a bit of an uncomfortable outcome. But what we now have is better competition in the market, which has generally served us well as consumers and citizens and as businesses. And we've also highlighted this intellectual schism at the heart of the artificial intelligence community between those who fundamentally believe that it poses a great risk to humanity and those who don't. And we know that the scientific community is also split on that risk. And now what we need to do is have a wider discussion about exactly how that might play out and what steps we need to take to research and understand it further. So when I look at the upside case of all of this, in a sense, if these disagreements were happening behind closed doors in OpenAI for the last 3, 4, 5 quarters, they're now in the open air where they should be, and that's where we can start to take the right kind of steps, if any are needed.
But Azim, is it going to play out in the boardrooms of Alphabet, in the boardrooms of Meta? How much of this is happening outside of the OpenAI, Microsoft sort of atmosphere?
Well, I think that this has probably not been a great outcome for Google. I think on Friday things looked pretty good because OpenAI seemed to have been stumbling. Now that Satya has swept in and built this team, I think Alphabet will look like they were asleep for the last 48 hours. I mean, they had an opportunity here, and perhaps they will get some OpenAI staffers. And I think for all of the firms, they will benefit tangentially by the fact that OpenAI's competitiveness has declined and there'll be more talent out in the market. But so far, Microsoft really
But is there anything of value? Sorry, Azim, just before we let you go and just to wrap this up, sorry, it just came to me. But then, is there any guts and gore of value left in OpenAI that Alphabet could pick up? Are we discounting too quickly what's left behind?
No, I'm sure there is, right? There are 700 people working in OpenAI. Ilya Sutskever, who is still there, is a phenomenal researcher who was behind many of the breakthroughs we've seen in the last few years. And there is momentum and know-how, and of course the existing GPT-4 and other models. So there is deep value. However, the board stepped up and fired Altman because they were worried about the pace, and it's not clear that they would allow there to be, another big tech firm involved.
Right. I mean, what a coup that would be if it were to happen. Azim, thank you so much for joining us. That's Azim Assar of Bloomberg Originals. Now, coming up, we're going to get you set up for the day, look at some of the market-moving events to watch. This is Bloomberg.
maybe I should go do something else. I can't do anything better than I'm already doing. I've already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
Of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
You're watching Bloomberg Brief. Danny Berger in London, Manus Cranny in New York. Let's get you set up for your trading week. Here's a look at what is ahead. In the UK, Governor Bailey is due to speak at 1:45 p.m. Eastern Time. Then he'll testify to Parliament on Tuesday, plus UK PMIs on Thursday. ECB President Lagarde speaks on Tuesday and Friday, and we'll also get ECB accounts and Eurozone PMIs on Thursday. Then over in the U.S., we're going to get Fed minutes. That's going to be released on Tuesday. Then jobless claims and UMich consumer sentiment will hit on Thursday. And then finally, U.S. PMIs on Friday as we head into the holiday weekend. Manus, what happened? I thought it was Turkey week. I thought it was Thanksgiving. There is like so much going on. I thought we were supposed to be able to be stuffed and take a break from all this data.
There's too many people taking Ozempic. They're not going to have the full Christmas, not have the full Thanksgiving turkey. And is it pecan pie or is it, what is it? What's the pie?
It's pecan pie and pumpkin pie. You have to have both of them, Manus. You can't just have one pie.
They're telling me, don't worry, they're $45 at Le Pain au Quotidien for, yeah, we got it there. $45 for a pumpkin pie at Le Pain au Quotidien. But of course, dollar yen. Where's the cheapest martini in the world based on a yen index? Look at dollar yen. You saw this in the break. We're looking at a big, big move in yen. This is dollar weakness as opposed to yen strength. I put it to you.
Yeah, I mean, punchy moves from the yen at 148 per dollar. Kit Juke said it does not belong at 150. He also said the most expensive martini was in Tokyo, so there's that.
Well, martinis at dawn, martinis in the evening. Let's have a look at where the real rate is for the U.S. This is the definition. It's Fed week, bond auction, Danny. Along with the minutes, is there any dissent? But the real rates in the United States of America govern the dollar move.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO, and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
From New York City,
In London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
The market has now fully embraced, not just that the Fed has finished its hiking cycle, but that we're going to see deeper and deeper cuts next year.
The Fed is effectively, in a sense, putting fiscal policy on autopilot.
We think the Fed is going to be lower in terms of cutting rates than what the market is pricing in.
I don't buy the rate cuts that the market is pricing in. Right now, the markets are priced, I would say, for beyond a perfect landing.
We're in the rocky landing camp, at least for now.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market just about positive on the S&P on a 3-week winning streak on the S&P 500. Shorter trading week for Thanksgiving. That's just around the corner. TK, we're going to start all snoozy this Monday morning. Talk about a soft landing, hopes and dreams. We have to begin with a weekend full of palace intrigue over at OpenAI.
It's just amazing. It's like on a Friday, you figure out you're going to lose your job, and that's what happened to Mr. Altman over at OpenAI. Then we went through it 1, 2, 3, 4 iterations. Ed Ludlow, all-nighter, Friday, Saturday, and into Sunday as well. And here we are with a happy ending for Satya Nadella about 2 o'clock this morning. Microsoft won, everybody else 0.
What a weekend.
Yeah.
What a weekend. Fired Friday, rehard Monday by a different company. Dan Ives of Wedbush says the adults are back. Bramo, this is what Evercore have got to say. It remains to be seen how much brain drain there will be over at OpenAI. We think the fundamental risk to Microsoft is largely contained with Altman and team on board. To Tom's point, Microsoft wins. The stock is higher, Lisa, by about 1.35% in the pre-market.
They're creating an independent AI group headed by Sam Altman and his peer, Greg Brockman, one of the co-founders also of the ChatGPT founder, OpenAI. Here's my question. OpenAI was founded almost as a nonprofit, right? The board is a nonprofit. It had very highfalutin aims. And there was a tension. Is this a commercial business, or is this something bigger about creating new technology that can innovate for humanity? And it really comes down to these questions. How does an independent agency that has the focus of making money police itself at a time of really uncertain rules?
I would suggest to people like me that were through the weekend going, are you kidding me? Can the Giants and the Jets be this bad? You know, the reality is there were 3 or 4 soap operas going on this weekend. One is the incredibly narcissistic idiocy of, you know, as a broader sense, Silicon Valley. 2 is there's something really going on here. I've got a brother who says ChatGPT is the second coming of Christ. Great. And Microsoft got that. Microsoft got this weekend the guy that started this. And, you know, it's going to be interesting to see how it sorts out. Nadella making happy talk with OpenAI about 3 hours ago, early East Coast morning. And, you know, again, I'll see how it works out. But I love what I'm so glad you brought up, Mr. Ives, where The bottom line is, are the adults going to do this, or people looking at philosophical cosmic garbage out 10 years
I think this morning, Tom, we've got to figure out what on earth happened over the last week. What happened on Friday? Lisa, was this about safety concerns? Was this about him going off and trying to build a venture that competes with NVIDIA? What was it?
I actually don't know, right? This question of how much there were these developments with the former designer of Apple to create some sort of hardware around this that was not involving the board or anyone at OpenAI. There are all these questions. We haven't answered any of those questions. We are now left to pick up the pieces and wonder what's left of OpenAI and what's Microsoft going to do.
I know the show's got to move forward, but I would say Anurag Rana, Mandeep Singh, I want to know who has the code, who has the copyright, who has the line-by-line knowledge of this pixie dust that Microsoft thinks is worth $13 billion? I don't know. I don't know the answer to that.
We'll be covering the story through this morning. From New York, good morning to you. Equity futures on the S&P 500. The scores look like this Monday as we kick off a new trading week. Futures just about positive by 0.05%. Yields a little bit higher by a couple of basis points here. No drama. Your 10-year, Lisa, 4.46.
I'm just going to talk about this shortened week and what we can expect. A lot of the data is sort of front-loaded. We do have an auction today, Tom. Funny that you mentioned that. We do. It's a 20-year auction. It's $16 billion of 20-year bonds sold today at 1 p.m. I actually think this is going to be fascinating because it's on a week that is shortened for the holiday, where people are trying to sort of eke out some volatility, some stability in the bond market after real whipsaw moves. Do we see that, or do we see some real pushback? Tomorrow, NVIDIA is reporting earnings after the bell, especially with the OpenAI intrigue and this question about whether Sam Altman was trying to come up with his own chips to compete with NVIDIA. How isolated is NVIDIA? How much do they have a competitive advantage in their AI chips? And I think that's going to be a real question, considering it's 238%.
Are they up to a record high, like Microsoft?
Yeah, they're all like going to the moon because of the hope for artificial intelligence.
John loaded the boat on that in April.
Did he?
Yeah.
I wish I had.
I'll just finish up here. We also get FOMC meeting minutes tomorrow, initial jobless claims Wednesday, and global flash PMIs on Thursday, U.S. PMIs for November on Friday, just to see whether we continue to observe the deceleration in economic indications.
Lisa, thank you. Looking forward to this week, particularly the time after the end of the week. Phil Orlando joins us now, Chief Equity Strategist of Federated Hermes. Phil, wonderful to catch up with you. We'll start with an easy one. Do you have more confidence that yields fall from here or that stocks rally from here?
I've got equal confidence in both, that we've got a deceleration in economic activity. You know, our chief investment officer, Steve Auth, has been instrumental in putting together this soft landing, rocky landing thesis. We think the next couple of quarters from a GDP standpoint are going to be decidedly slower than we saw in the third quarter. As a result, we're all in on this equity rally. We thought that at 4,100, I guess about a month ago, the Federal Reserve is done in terms of raising interest rates. They're on hold. They're going to be on hold till the back half of next year. So we expect that bond yields are going to grind lower. They've gone from 5% to 4.5%. We think that stocks are going to grind higher. They've gone from 4,100 to 4,500. And we think that's a trend that's got legs.
Phil, you're the only one that'll remember this. It's always good to quote the Dow on a Monday morning. Phil, I'm going to go back to 1977, and the Dow was 894. We had a first leg of a bull market out of 74, and then some real, not malaise, but, you know, just some angst. And then, boom, in 77 it began. Is this the second leg of a bull market?
We think it is, and we think the Federal Reserve has done everything it needs to do in terms of creating that positive relationship between where's the upper band of the funds rate at 5.5% now, and where's nominal annualized CPI inflation, which is 3.2%. So the Fed's finally achieved what it needs to do, and on top of that, the bond market's done the heavy lifting for it. Since the last Fed rate hike in July, benchmark 10-year Treasury yields have gone from 3.75 up to 5%. That gives the Fed the luxury, in my view, to step back and say, you know what, we don't have to hike anymore. We can just sit here on the sidelines for the next year and allow the gradual slowing of inflation to occur.
I want to talk, Phil, about the doing of a portfolio. So you're hanging out with Steve Auth. I assume you guys are on speaking terms. And you say to Steve Auth, are you going to widen out and go for breadth next year? Is it going to be the Magnificent Seven again, or do you see breadth?
The answer is breadth. That when we went all in equities a month or so ago, we took our equity overweight up to 5%. And our feeling is that the stocks that have been left for dead, domestic large cap value, small cap domestic growth, international, those are areas that are unloved. They're trading at very modest PE multiples, low betas, very high dividend yields. So we've started to see those stocks play catch up here in the last couple of months, and we think that's a trend that plays out over the course of calendar 24.
Do you care then about all of the artificial intelligence talk and the palace intrigue, as John was saying, around OpenAI, given how much that trend has driven gains so far this year?
Lisa, we do. And we were resistant in the first 7 months of the year because that Magnificent Seven, in our view, simply got ahead of themselves. So when we got that 11% correction over the August, September, October timeframe, a lot of these growth names came down by, 20, 25%. That gave us the opportunity to close what had been a significant underweight in those growthy technology names. We've gone from a 5% underweight to a 1% underweight. These are great companies. We just felt the valuation had gotten ahead of itself when we looked at them in July.
When you talk about grinding higher when it comes to equities and grinding lower when it comes to bond yields, how much does this actually lead to outsized gains versus just basically not losses?
Well, we think there will be outsized gains because if I gave you a little snapshot of our target for this year from 4,100 to 4,600, but as we look out to next year, we think the S&P 500 can hit 5,000 by the end of the year. And depending upon how the economy plays out next year, and certainly the results of the election next November, a year from now, are going to be critically important. The potential prospect of more business-friendly, more market-friendly fiscal policies could allow that rally to continue up in the 25 and 26 period. So we could have a really nice couple of year period here, but obviously there's a couple of shoes that need to drop and fall into place here in order to be able to make that forecast with a higher degree of confidence.
Phil, let's finish here. Data point of the week, jobless claims coming up before Thanksgiving. They've been climbing from very, very exceptionally low levels. Are you focused on the level still or the change?
John, I'm glad you brought that up. That is the one data point we're focused on this week. The October survey week, 200,000. It was a 9-month low. The number we're going to get this Wednesday is the November survey week. All right, the number that's expected is 225,000. That's a 12, 13% increase. When we look at the non-farm payroll number last month with the revisions, it was the worst number we saw in 3 years. The household survey lost about 370,000 jobs. We think the labor market's starting to slow. The rate of unemployment has increased by 0.5% in the last 6 months. So the labor market is something we're watching closely. This week's jobs report, or the survey data, for the initial weekly jobless claims, we think is going to be a critically important variable.
Hey, Phil, great to catch up. Thank you, sir. Phil Orlando there, of Federated.
Happy Thanksgiving, guys.
To you as well.
Yeah,
happy Thanksgiving, sir.
you.
Looking forward to the holiday later this week. Lisa, this is the question.
Second
the
time.
question. Second time, sorry. Should we make it 3? Looking forward to the day off later this week. Okay.
Okay, carry on.
It's become a very special day for me. Anyway, jobless claims. What is the difference between a welcome loosening in the labour market and an unwelcome deterioration? That's going to be a huge question for market participants in the weeks to come, because I think at the moment it's welcome. Yields drop. You can have that constructive tone around equities. At some point, it starts to turn, Lisa. I just wonder how close we are to that.
If you look at history, there is always a non-linear increase in unemployment rates once you have a 0.5 percentage point increase in the benchmark jobless rate, which is basically what we've gotten over the past 6 to 8 months. So this raises a question: is this time different? And a lot of people are saying, yes, it is. And then everyone says those are the worst words to ever say in finance or anything else. So here is where we're at. Do you go on history, or do you go on the fact that we're in a unique period that's been distorted by a whole host of factors?
I would listen to somebody who had the courage in December of, it was a long time ago, John, help me, 2018-19, Ben Laidler, all alone at HSBC, said, just shut up and buy. He was really alone. Laidler with a weekend note, and Lisa, to your many good comments there, it's a tall wall of worry, and Laidler's adamant it is fading away.
He's still bullish.
He's
just
not
for the
only
record.
bullish, but he reaffirms.
Bullish most this year.
He reaffirms the why he's bullish here at this season, where he literally made his modern career.
Have we said happy birthday to the president yet?
We should.
Happy birthday, Mr. President.
Greg Valliere want to say happy birthday.
NBC News gave him a gift. That poll over the weekend.
That's
was
not a gift.
Not much of a gift, Bramo, was it? Did not make for good reading.
What do you give a president for his birthday?
Not a
Not
bad
that
approval
poll.
rating, exactly.
Just
which is essentially-
33% of all voters approve of Biden's handling of foreign policy, down 8 points from September.
And how
That's
much
the story.
and how much is it related to his 81st birthday, right? It's sort of an awkward celebration when it's the biggest liability against him in this particular election.
What I find fascinating, and I'm sure Greg Giroux and others at Bloomberg, Emery Horton, are going to do great work on this. The cumulative effect of inflation is his biggest problem. I mean, forget about all this modern political stuff.
You think that that's it, more than his age?
Yeah, people are looking back to the fall of 2019 and saying, am I better off? And the answer is no. But look what that artificial tree cost you. It was lifted. Is that puppy up
Actually,
uh,
no, that was Home Depot. I think that was like $150. That wasn't too bad. It's up. It went up on.
You need a charity Christmas tree.
Your charity tree last
move
2
the
weeks.
decimal.
It cost $350.
freaking dollars.
From New York. Good morning.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
So we get to ride in an Uber with the Uber CEO.
Yeah, that'd be pretty cool.
Come along with me, Emily Chang, as I ask tech leaders of today what makes their businesses future ready for tomorrow.
You're an expert.
How would you describe your relationship with Satya Nadella, how much control they have? You know, I've heard people say, you know, Microsoft's just going to buy OpenAI. You're just making big tech bigger.
Company's not for sale. Like, I don't know how to be more clear than that. We have a great relationship with them. I think it's that these like big major partnerships between tech companies usually don't work. This is an example of it working really well.
So well, he's now working there. The former OpenAI CEO, Sam Altman, speaking to Bloomberg's Emily Chang. Earlier this year, Altman ousted from the company late Friday, now joining Microsoft and leading its new AI development team. Big weekend. Big story developing through that weekend. We'll get to it in just a moment. Welcome to the program from New York City this morning. Good morning to you all. Your equity market on a 4-day winning streak on the S&P, 3-week winning streak on the benchmark here in America. Equity futures just about positive by 0.04% on the S&P 500. Yields pushing a bit higher on a 10-year by a couple of basis points. Call it 3, 446.27. Big move lower last week, TK. 10-year yield down by something like 22 basis points to the lowest since September.
With all this madness over the weekend, let's just focus on the data right now. And you mentioned that, John, the dynamics there. We're looking at, futures up to the VIX 14.16. The dollar weaker maybe is the lead story that no one in America is looking at today.
Worst week since July.
And it's like a legitimate rollover. Kit Jukes, I thought was great on it. And his morning note, Jukes, commenting here on, weak dollar, lower dollar changes things.
Well, I mean, how much does this have to do just with rate hikes being taken off the table and rate cuts increasingly being priced in by even as early as May next year? And how much does this have to do, to your question, John? Is this just an orderly unwind of a super hot market, or is this something more pernicious that has legs that could lead to a more protracted downturn?
A big focus, Tom, on claims. We're at that stage of the cycle where you start to focus on claims.
Yeah, and that's the Morgan Stanley Goldman Sachs differential is the labor economy.
Lisa mentioned something that Priya Misra also echoed on Friday, that when you start to get these conflicting narratives, Lisa, that maybe you are at a turning point in the cycle, which is something that Priya over at JP Morgan made a point of saying.
We've been seeing these conflicting data points for quite a while, which is part of the problem, right? And it adds to the confusion. At this point, it's clear there is a downtrend in the data. The question now is just how far will that go?
DXY 105, 104 to 103.60 euro. Do you retire with a euro 110? Is that like that good for you?
110?
Yeah, 110. Is that
closer to parity, and then I can make the
126
move.
sterling. We're not there yet.
I'll take 95 on euro dollar, Tom, and you can retire me.
Okay.
Okay.
Retire me.
Yeah. Speaking of retire me, joining us right now from London, and it's good to get his perspective. A lot of different perspectives on the festivities over the weekend. From a distance in London, Mark Bergen observed what we saw in California and gives us a cultural overlay today. Mark, I was sort of dumbfounded, and I love what Dan Ives of Wedbush said, that the adults won. We saw that 4 hours ago. Yeah, 4 hours ago, where these guys joined Microsoft, and they're going to be a folded-in research group of Microsoft and that. Is it going to be a brain drain from the children of Silicon Valley over to the grown-ups?
That's one way to put it. I mean, it's certainly we saw the announcement. Greg Brockman, who's another co-founder of OpenAI that's now also joining Microsoft, posted on X, tweeted that there's at least 3 other research scientists from OpenAI who are joining them. Sam Altman, for probably his best quality was to be this diplomat and recruiter, and he was going out and poaching these top talents from Google, and now he can do the same thing, presumably inside Microsoft.
Well, Mark, what's great about this, and I know you did this in Chicago studying public policy, it is about a public image and private conversations. Altman was basically a wonder child out of St. Louis, 1 year at Stanford, said, see ya, and he's a people guy. Explain how he works in dialogues between corporate types like Satya Nadella and some high-strung genius AI guy writing code.
He's pretty masterful at this. I mean, he spent his formative years at Y Combinator, which is like the incubator of startups inside Silicon Valley, and has this built these relationships, I think, in part because you have a lot of venture capitalists, you have CEOs like Satya Nadella and all the big tech companies looking at Y Combinator, sort of saying, here's sort of what's coming next in innovation. Here are the startups that we might want to acquire or we might want to fear. What he did on this he kind of did a globetrotting tour this summer with OpenAI, and he came to visit London and at UCL, and he's treated like a rock star, right? Like after his event, he was just, I couldn't get near him. He's just mobbed by developers and fans. I think people who are wanting to glob on to this revolution that they see as sort of the next wave of computing. And he really leaned into that in a way that, say, Demis Hassabis, who runs DeepMind, is a much more sort of prototypical engineer, a little more quieter, contemplative, not as comfortable being that sort of figure that I think Altman can be.
So is this basically an example, Mark, of how the behemoths in the tech space are going to own artificial intelligence, are going to either buy or destroy de facto some of the startups that are coming up with the key software, and really the dominance is just going to continue to consolidate?
It's hard to argue against that. I mean, this has clearly been, for Microsoft, been this big boom for their cloud business, right? Challenging Amazon and Google for their developer business. Their relationship with OpenAI is kind of the biggest investor and partner, but it was a little unclear, like when they were going out, OpenAI is obviously trying to commercialize this, and Microsoft is basically selling the same thing, and I think that tension's only going to increase. I mean, we've certainly seen the gains from AI so far go to NVIDIA, Microsoft, and Google. The one exception was OpenAI, and that'll be I think in the coming weeks we'll see when these engineers land, right? The engineers who actually build and maintain these large language models are kind of the key ingredient, and whether there's this mass exodus will be really answer that question.
Yeah, in the past hour, Sam Altman has retweeted 2 different comments saying OpenAI is nothing without its people. So to your point, sort of signaling some of this exodus or foreshadowing it just a bit. Moving forward, there is this key question around what actually happened. Was the ouster really driven by concerns about a lack of ethics or a lack of understanding of the potential dangers of artificial intelligence, or is this a personality battle that had to do with some of the side dealings that Sam Altman was working with?
Yeah, I'd say a lot of it's coming from our reporting in part because the board of OpenAI, as far as I know, has not, unless it's happened in the past few minutes, has not put out a statement or not put out anything really clarifying beyond their initial comments that he was not candid in his communication. So our line of reporting showing that Altman was out there raising capital from investors in the Middle East for both a new AI chips business that would challenge NVIDIA, potentially a new hardware, piece of like a device working with Johnny Ive, famous for designing the iPhone. That seems to be an issue. The other one is just the debates around AI safety. So some of the other founders of OpenAI believe fervently in this idea that they're trying to build an artificial general intelligence. And they're also, and the new CEO they brought in, Emmett Shear from Twitch, has also been part of this philosophy that believes that AI poses this existential threat to humanity. And if you believe that, and you believe that a CEO was leading in a opposing direction or something to harm that risk, then I think that would make sense, justify perhaps. But I feel like there's something else that we haven't heard.
Mark, thank you, sir, for your perspective on things. Mark Bergen there of Bloomberg out of London. Dan Ives of Wedbush out on Twitter. Here's another tweet. The circus show 4-person board at OpenAI was at the kids' poker table and thought they won, until Nadella and Microsoft took this all over in a poker move for the ages, with the Valley and Wall Street watching nervously Sunday night. Microsoft now in a stronger AI position, TK, than ever before.
Long ago and far away, a gentleman from Middlebury College, Dennis Kozlowski, was a company called Tyco. He enjoyed some prison time off of that. Really challenging. On a conference call, I heard Dennis Kozlowski say, "We take out for the engineers." The only reason Tyco would buy an acquisition was to buy the brain power, which you just heard from Mark Bergen.
Yeah, and you can come up with whatever narrative and the circus and the adults and the other things. You can put it all together and make a beautiful story. We don't really know what happened, but the bottom line is, as he says, the consolidation among the dominant big tech names is almost that much more of a certainty.
Let's put it this way, and we've got no idea what really happened over the weekend. Let's be clear about that until we actually get a statement from the board, which would be nice. If the board was concerned about safety, given what's happened with Microsoft in the last 24 hours, haven't they just heightened that risk by the move they made on Friday?
100%. Ultimately, is it a commercial organization or is it something else?
Well, Microsoft for sure is a commercial organization,
Correct.
without a doubt. Andrew Holdenhorst over at Citi joins us next from New York City. Good morning.
this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Days of gains on the S&P 500 could become day 5. Looking at equity futures right now, we are advancing by just 0.04%. The Nasdaq 100 up by 0.1%. 3 weeks of gains for the first time since July, believe it or not, on the S&P 500. Things have been that rocky. The narrative just switching back and forth. James Athey, Aberdeen, keep quoting him from months and months ago. Narrative, table tennis, or ping pong. Pick your version of things. 2-year, 10-year, 30-year. Looks like this in the Treasury market. 10-year yields down more than 20 basis points last week. Lowest level since September. Yields a little bit higher by 3 basis points. 446.47. 2-year yields last week down around about 18 basis points. Just the whole curve, Lisa, shifting lower. 2-year out to 30 years.
Soft landing. That has been the hope, the dream, the idea that what we're seeing right now is a controlled softening in the labor market, et cetera, and can continue just landing this thing in this fantastic way. They can give the Fed confidence to say, we've done it, which makes me wonder what they can say to make anyone think that that's not how they're feeling.
I was sitting on the Bloomberg yesterday evening, just going through the numbers for the week, and I was sitting there thinking, CPI was this week?
I know.
Not even a week ago?
I know.
It feels like months ago.
But it single-handedly changed the narrative.
That small downside surprise enough to engineer a monster move in the bond market, and this in the FX market. The worst week for the US dollar on the dollar index going back to July, Tom. The euro at the moment, 109. We've reclaimed 109 on the euro against the dollar.
And saved Japan as well, 164 down to 162 euro yen. And dollar yen, the same thing. I take your point that CPI was ages ago, but it's the forward data that's going to matter here, right into the jobs report for November.
Yeah, looking ahead to claims. We'll get some Fed minutes later this week as well. Let's get you some top stories. Under surveillance this morning. Fired by OpenAI on Friday. Hired by Microsoft on Monday. OpenAI co-founder Sam Altman joining Microsoft to lead its AI program just days after being dumped by his former company after he, quote, lost the trust of the board of directors. Microsoft, of course, holds a roughly 49% stake in OpenAI, but CEO Satya Nadella failed to have Altman reinstated at the company. Nadella, writing on LinkedIn, quote, we remain committed to our partnership with OpenAI and have confidence in our product roadmap. Bramo, what a messy weekend trying to follow this one.
Yeah, I'm not sure that I come up with anything conclusive in terms of understanding what actually happened.
Nobody can.
We have no idea. The bottom line that I can see is Microsoft, as Tom said, is the winner. All of the big tech names are going to be the winner as they consolidate some of their power. And then also technology is moving faster than any regulation or agreed upon code of ethics as to how this should move forward. So to me, the cat's out of the bag. And the question is, what's going to necessarily come of this as profits are prioritized?
I agree with everything you said, except one small detail. On a game theory basis, I'm trying to figure out how Amazon and even Google involved in this, how they win if the cricket player from Microsoft takes the talent. To me, it's all about the talent. And I got to believe at the margin, the engineers Microsoft migrate to stock options on Microsoft.
And Microsoft in the driver's seat, that's for sure. Yeah. Your next story, this one, libertarian outsider Javier Milei promising a radical shake-up after winning Argentina's presidency. Milei's campaign pledgings include ditching the peso for the US dollar and shutting the country's central bank while undertaking drastic cuts to public spending. Inflation in Argentina has soared towards 143%, with more than 40% of the country living below the poverty line. And Lisa, clearly, they wanted something different.
Clearly. Did you see some of these videos? Health Ministry out. Department of Education out. Central Bank
which ministry
out.
does he want to keep?
No, nothing. He doesn't want to keep anything. He's going to keep the U.S. dollar, and he's going to talk about, you know, some of his quirky, eccentric habits, and let's see.
Shut the central bank, Tom. The peso's out, the dollar's in.
He's got a blue backdrop behind him, which is what they call the blue dollar, which is the black market dollar. Basic quote, 869. The peso's at 353, and the real free market, black market, blue dollar is a little bit weaker, 869 per U.S.